Okay, we'll be starting shortly. Can I just ask Miss Orette Troy Duncan, are you in the room? Orette? No, Orette. Sorry, Mr. Oh, it's a Mr. Oh, Mr. Orette? No, he's not here. Is there? Oh, yes, please. You found him? Okay, we're about to start. Damien, yes, we need you. Okay, so you can use this opportunity to fill in your cards. So I've put the questions back on the screens. So you can use the next minute or two to fill in your cards as it relates to the EU lessons or lessons from the EU, because we're about to start our panel on the Caribbean country examples. So you can use the next couple of minutes to fill in the front of your cards. Okay. Okay, welcome back. So we have our esteemed panel here to take us through some Caribbean country examples of parametric insurance schemes. But first off, I would like to invite Mr. Damian Hines from the Inter-American Institute for Cooperation on Agriculture to give us, an overview of agricultural insurance schemes in the Caribbean and some country examples. Thanks, Damian.
Good afternoon, everyone. Trust everyone is well fed and watered. Like my other ECA colleagues before me, I am no expert in insurance, so I'll be trying my best to present the country examples that we have available. So I beg your attention. Before we get going into the agri-insurance, let's just set the stage for what it is we're talking about. What is the context for agriculture in the Caribbean? Now, I know presenters before would have spoken a bit about these figures, but so you know, historically, we're talking about a sector that contributed significantly to GDP in the region, exceeding 50% in most cases. And there was in place, as the presenter from FAO yesterday stated in his presentation, indemnity insurance available for most of the prized crops that we have in the region. So you would know about sugar in Barbados, banana in the OECS, coffee in Jamaica, rice and so in Guyana, Trinidad and so, right? Currently though, when we look at the situation, we recognize that it's almost the flip. So we're going from great contributors to GDP to, in some cases, like in Trinidad, less than 1%, right? Further, we're talking about small producers, generally producing on less than a acre, 1 hectare of land. So that's why it was very interesting to hear the question about what are the premiums that are available for smaller producers that came out in the presentation earlier, right? Of course, we're also speaking about, as far as the production goes, we're speaking about low productivity practices and generally marginal returns in the sector, right? Point to note, right? Again, we're talking about agricultural insurance schemes. This is the presentation that I'm giving. A ESC report in 2023 indicated that there were no established agricultural insurance programs at the country level, right? What we realized, as was presented on, that we have an emergence of these multi-country risk pooling parametric programs that offer products and solutions to farmers and fisherfolk, right? So they are not necessarily set up to cover for crop loss, but protect livelihoods in the event of a hurricane or any catastrophe. Just some general figures, again, to point to the state that we're currently speaking about. And I know there's been some debate on the accuracy of these figures and so on. This is one of the things that I think we need to highlight. The consistency in the sources of information. One of the things we recognize from the examples, especially in Europe, the availability of data and the validity of data is key to making decisions with respect to insurance, and therefore we need to make sure that we have accurate figures from the sector level to ensure that we are, allowing ourselves the best opportunity to get the best solutions, right? The point I wanted to make on this though, because we know insurance is about subscribers. The more subscribers you have, the more affordable products you can offer. When we look at Barbados and the OECS, we're talking about less than 30,000 farmers in total, compared to Jamaica with an excess of 200,000 farmers. And I know we're gonna have an example from what is happening with microinsurance in Jamaica later on. The global context, we're seeing an increase in the uptake of agricultural insurance premiums worldwide, and this was again evidenced by the presentations that we had earlier, particularly in Europe, but we're also seeing a 5-fold increase in the emerging markets, right? Going from just about a billion in 2005 to up to 5 billion in 2011, right? So of course, the Caribbean is a part of this emerging market. Okay. 2024 study on agricultural insurance by GIZ found the following. Again, consistent with some of the information coming out. Less than 10% of the farms had any agricultural insurance in 2020. Parametric insurance is the most common and is increasing in uptake and popularity. Approximately 80% of agricultural insurance programs are at least partially subsidized. Again, pointing to looking at the exposure for agriculture, the economic impact, and therefore countries recognizing that they need to support the sector by way of providing subsidy. As with the global trends, this is not absent in the Caribbean. We are recognizing the emergence of these parametric solutions. And I note though, that all of these solutions are actually triggered by natural disaster events, such as floods, cyclones, earthquakes, etc. So now we're going to look at the examples. And I started with rain crop because this is perhaps the most recent crop insurance program to wind up. In fact, it was in existence between 87 and 2009. It operated covering 4 countries: Dominica, Grenada, St. Lucia, and St. Vincent. And I know the folk from the OECS will be very familiar with this program. Just for some comparison to figures I will present later, Rain crop would have processed 98,000 claims, almost 100,000 claims, with a payout of approximately US 28.5 million among the participating countries. It's interesting to note that while this indemnity insurance is no longer available, there are some examples that we could build on from rain crop within the, again, to complement the existing parametric models to offer solutions for the region. Okay, so the first example that we would give is the CRIF, and I know we had an example, so I'm not going to spend too much time on this because I know Liz is here and she presented quite a bit about what they did yesterday, and they will also be speaking about their livelihood insurance product coming up. So just to note that the most recent product, and Liz, you could correct me if I'm wrong, was in 2020 when COAST was launched, and they provided protection for fisher folk and rehabilitation of coastal infrastructure in, okay, good, in, for Grenada and St. Lucia. Right? As I say, we can get some more information. So just some examples of CRIF payouts. We saw a figure where they were exceeding, I think, 350 million in total payouts to date. These just gives a snapshot. This is for the OECS and Barbados, really, to give a snapshot as to where, which countries would have received the payouts and the level of payouts to those countries, as well as the policies that they would have paid out. So under tropical cyclone, total earthquake policy, and excess rainfall. Snapshot of what happened with respect to Beryl. The government of Grenada would have received, as you can see there, through the tropical cyclone policy, in excess of 42 million. And the coast policy would have triggered a payout of excess of $1 million. And you see just over 500,000 in excess rainfall, totaling over $44 million. The next one we're going to present on briefly. Again, they have a representative here, so they will be able to speak to this a little bit more in depth. But the Grace Kennedy, in 2001, they would have launched their Weather Protect solution. And you can see what they offer: one-time premium, flexible coverage options, customizable limits from US $320 to a maximum of $6,400 US. They offer seasonal coverage, so you can take coverage for only a part of the year. It's only offered in Jamaica, but I understand that there is some interest in expanding to other countries as well. You should note that from the press, this is something I got out of the press, that 27 farmers following the floods in 2023, and I guess you could verify these figures, that 27 farmers from Clarendon, Manchester, and St. Elizabeth would have received payouts. Next up, we have Corp EFF, which is a company, an insurance company registered in Dominica and Grenada. Again, 2001, they would have launched a flexible hurricane protection policy. And the highlights, as you see there, where we just skip to the part where they pay out the 1.4 million to Grenada following the passage of Hurricane Beryl. And you see the partnership, they established a partnership with the Ministry of Agriculture in Grenada and the Cooperative Nutmeg Association to secure coverage of US 2.9 million, as well as US 3.9 million to support hurricane protection in Dominica and Grenada, right, for the period June 2024 to May 31st, 2025. Next, we have the insurance product REAP, which was launched very recently here in July 2024 by Lynch Insurance Brokers. It's an initiative being rolled out in 6 CARICOM countries, and you see them listed there: Guyana, Barbados, Dominica, St. Lucia, St. Kitts and Nevis, and St. Vincent and the Grenadines. They intend to offer multi-peril coverage options, the issuance of direct payouts to farmers as well as governments, flexible scope tackling micro, meso, and macro at the macro levels. They're offering a hybrid insurance solution with parametric mixed with layers of indemnity options. They're also developing health benefits and health and benefit insurance solutions for farmers and fisher folk. One of the things we recognize, though, is that the model requires the participation of an insurance company in each territory, as well as the participation of other insurance brokers. This template basically highlights all of the different programs that we would have just gone through, and it is pretty much, for me, the starting point for collecting other information on insurance programs across the country. So again, Wincrop as an example of the past. We have CRIF with their payouts in excess of 300 million. Of course, we would like to collect information on the LLP CRIF payouts. We have the example of COAST. We have the example of Grace Kennedy. We have the policies. We don't have the value of the payouts. Corp EFF, as I mentioned, with the nutmeg payout to the farmers in Grenada. And of course, Lynch being the newest kid on the block, so to speak. We now have to get information from them. Concluding remarks, and I trust that I'm within my 15 minutes. Yes, well within 15 minutes, no problem at all. So yeah, we're seeing an emergent, now climate risk is something that's being taken very, very seriously. Of course, all of the governments, farmers, fisher folks are interested and eager to get solutions in this particular area, right? We have seen the emergence of regionally grown insurance programs that we would have described. We know that all of the products are parametric solutions that are triggered by extreme climate events. We know that none of the programs address non-climate agricultural risks such as predial larceny, pest and disease loss, or animal predation. We note that there is a relatively low appetite, uptake of agricultural insurance in the Caribbean. And I think this still stands for the world when you look at the examples presented yesterday in particular. A 2023 study conducted looking at the insurer side of things now. When they surveyed insurance companies in Guyana, these are the main reasons why they were hesitant to going the route of agricultural insurance. Lack of specific legislation. I know we are going to be discussing legislative frameworks and so on in our breakout groups tomorrow. So perhaps we could look at each country to see where we are as far as addressing that particular situation. The high risk and weather profile, the lack of technical knowledge, difficulty in obtaining a reinsurance, and also the potential for large losses, which possession insurance companies as being unprofitable. So I believe that is it. I'm not sure if we're taking any questions at this point or if we're going to go into the next presentation. Okay. We're allowed to take one question, and I think you have a couple minutes to raise that question. Going once, Lynch.
Look, Lynch. In your presentation, you did indicate one of there's a. In your presentation, you did indicate that farmers are reluctant, or people in the sector are reluctant to take up the agri-insurance. The question I'm asking, is it really, is there an underlying reason why? What do you think are the underlying reasons? Is it the fact that maybe there's an expectation by the farmers that needs to be done by government, and maybe legislation is required, and more training of the farmers, more sensitization, and more advocacy.
Yeah, well, you did touch on a couple of things that we did find in a situational analysis that we're trying to conclude. Technical support, lack of sensitization, farmers not understanding what the insurance can do for them. One, the cost of the premium is something that, again, is a throw-off for the farmers. And I think, thirdly, what is covered, the risk, as I mentioned, things like predial larceny, animal predation, pest and disease losses sometimes affect the farmers on a more day-to-day, month-to-month, week-to-week basis than, let's say, a climate event. So while we have parametric solutions and insurance solutions that target these things, they're not really hitting home at what causes the farmers' losses on a day-to-day, week-to-week, and as I say, month-to-month basis, right? So those are some of the issues that we have found as to why there's a low uptake. However, this does not necessarily obtain for agriculture insurance alone. We recognize that there, even in house insurance, there's a reluctance, maybe within the Caribbean context, and we can't speak for anywhere else, but certainly when I look at Barbados, there generally is a reluctance for persons to buy insurance, right? And of course, the persons that are more vulnerable is the issue of whether they can afford it, right? That's it?
Thank you, Damien. In fact, I think our next presenter will touch on your last point about having products that are specific to the things that affect the farmers' production, because I notice it's windstorm insurance for coconuts in Jamaica. So do you still want to make a quick comment on this, or you'll pick it up when you come on? Yeah, okay, great. Okay, great. So let me invite Nichelle Blackwood from the Coconut Industry Board of Jamaica to give her presentation.
Just a moment. Yeah, I'm on the Zoom. I'm just sharing it a particular way. 1 second. Oh, just 1 moment, please.
Okay. While Nichelle sets up her presentation, we will move to a presentation from CRIF and ILO on CRIF's new product around livelihood protect. Oh, you're on? Oh, you're on? Oh, great. All right, Nichelle. Okay, great.
right, so good afternoon, everyone. Yes, good afternoon, everyone. My name is Nashelle Blackwood. Thank you. Yeah, and I'm the Corporate Secretary and Legal Officer for the Coconut Industry Board. Like the presenters before me, what I will say is that I am not an insurance expert. I'm an attorney, like the very first presenter. So this will be coming from somewhat of a policy perspective. The Coconut Industry Board manages a windstorm insurance fund. It's a legislative mandate that we have. So let me just take you through the summary of what I'll be discussing today. So I'll be looking at giving an overview of the Coconut Industry Board, looking at the importance of insurance and reinsurance to our industry, to the coconut industry specifically, the risks that affect coconut, the effect of burial, the windstorm insurance in some detail, and then even though we have this scheme or this framework in place, there are limitations to it because it's been around since 1949 with very little amendments. So, and then I have some recommendations. So the Coconut Industry Board is a quasi-governmental institution in that it is wholly self-financed, and that's what sets us apart. And we operate more or less as a business. The governmental part of it is because we're responsible for developing the coconut industry of Jamaica, and we are responsible for keeping the government informed on the state of the industry and encouraging coconut production through our planting programs. So we're an agricultural board, and with our planting programs, we give free seedlings to farmers, free fertilizer, free weed grants. We provide technical advice as well. So when a farmer wants to go into planting coconut, our advisory officers will go out and make sure the spacing, how the depth of the hole that you're going to put the coconut in, we are that granular in our approach. It's very personal. And we also, at our core function is research and development. So as to some of the, and the uniqueness of Coconut Industry Board 2 is that our board consists of 5 farmers and 4 government-appointed directors. That's how it was set up in the statute from 1945, and that's how we've continued to operate. So it is the farmers who are at the table and who lead the discussions, and they are the majority. The research department focuses on the creation of high-yielding and disease-resistant coconut varieties as well. So this is also important because of the risks that affect coconut. So there is pests and diseases, particularly lethal yellowing disease, bud rot, gall mite, and ambrosia beetle. And there is climate change. You've heard about climate change for the past day and a half. And then there is predial larceny. I think it's important to note the effect of predial larceny in particular, even though you know of it. So over 90% of producers, not just in coconut, overall, reported being affected by predial larceny. And according to our Ministry of Agriculture, Jamaican farmers suffer a loss of over 5 billion Jamaican dollars, that is over 31 million US dollars per annum, due to predial larceny. So what this means for coconut is the value addition is very limited because the coconut, every single part of the coconut can be used for something. From the bark of the tree can be used for lumber. We use the water, coconut water filled with electrolytes, but the part where most of the value addition comes from is the meat. And the meat, that part of it doesn't mature until 9 months and onwards. So at 12 months, 13 months, and that's when we also set it in the ground to get seedlings. So most farmers will say they're not interested in going into, or they're not interested, but they won't necessarily go into the value addition part of it, because as far as they're concerned, the longer the coconut is on the tree, somebody is going to steal it. So predial larceny significantly impacts our industry as well. And these are some of the risks that we're supposed to be catering towards with insurance. As it relates to the importance of crop insurance and reinsurance, you know all the reasons, but one of the main reasons that I want to highlight here is with our gene banks. So we have a seed garden in St. Elizabeth that provides seedlings. So Jamaica has over 325,000 hectares of agricultural land. 30% of that is in crops, and 5% of that is in coconuts. That is over 16,000 hectares. We have over 4 million coconut trees. That's more trees than people. And every single coconut tree that is there is because of Coconut Industry Board. So when we were affected by lethal yellowing, where we lost over 1 million trees, we would have replanted that. Same thing with the Hurricane Gilbert. We lost over 1 million trees. We distribute these free benefits, and we would have provided that. In terms of burial, the agricultural sector was significantly hit, estimated loss of over $30 million US. The crop industry was significantly affected, as well as banana. So this picture is actually from Jamaica producers. We only lost over 4,000 trees. That accounts for about 3% loss in annual nut production. We're grateful we weren't greatly affected, but notwithstanding how bad the hurricane was, we weren't affected because of where we are. So our coconuts in the east, if there should be a hurricane like a Gilbert, they would be greatly affected. But the coconuts in St. Elizabeth, because it is hilly, the hill kind of get the brunt of the wind first. So our farms weren't affected significantly, sorry. Now to the policy that we have, there is windstorm insurance. So the Coconut Industry Board is mandated to institute, finance, and operate automatic and contractual insurance. This is under the Coconut Windstorm Insurance Act of 1945. So we've put legislative policies in place. Windstorm here means hurricane, tornado, cyclones, whirlwind gale, other atmospheric disturbances. Now, how is it responded? I won't go through all of them in the interest of time, but there's a windstorm insurance fund that the Coconut Industry Board maintains. I'll just focus on the premiums and the reinsurance. That's important to the presentation. There are two types of insurance. So there's automatic insurance and contractual. What is similar between the two is that you must be a registered coconut farmer. The automatic insurance is literally so long as you are disposing of your coconuts through the Coconut Industry Board, so you're selling us coconuts, we provide coverage to you for every unit of coconut supplied. And then there's contractual insurance, which is basically, it's indemnity based. So we compensate you based on the loss that you have. Both insurance policies look at bearing trees and non-bearing trees. So coconut takes 3 to 5 years to bear, so we have to also provide for the non-bearing trees. In terms of the contractual insurance, the farmer has to satisfy the board that he has either no automatic insurance or that his automatic insurance is insufficient to provide a reasonable cover against his possible loss by windstorm. They also have to make an application and pay the premium before July 1st of each insurance year. That's because the insurance period is July 1 to November 30. The hurricane period is in that, July 1 to November 30. The general conditions to receive the benefit, the damage must be at least 5%, and there's also a 5% deductible. I won't go through the entire process because it's an indemnity-based process, but I'll just give you a scenario. So Farmer Brown is a registered coconut farmer with a 50-acre farm. He has 4,000 trees, 3,000 are bearing, 1,000 are not bearing. Now, our records show that Farmer Brown has disposed of 120,000 dry and jelly coconuts through the Coconut Industry Board and other coconut dealers in 2023. He qualifies for automatic insurance because he's selling us coconuts. He has also purchased contractual insurance, so he's paid a premium. Hurricane burial has resulted in him losing 1,500 bearing trees and 500 non-bearing trees. So half of his cultivation is affected. Using the indemnity method of calculating and going out, the loss adjuster going out and seeing what the actual loss is, this farmer, using money of the day, because again, I said it's 1949, there hasn't been a lot of amendment to the legislation, but because a part of our funding is through how we invest the funds, it's invested in money of the day. The issues that they're facing are of the day. So the board is minded to look at the payouts, the payments in relation to money of the day terms. So this farmer would receive $54,000 US for the contractual benefit and $15,000 US for the automatic benefit, totaling $69,000 US. I've just used US here for ease of reference. I know the policy sounds like something that works and it's good and it does work, but there are limitations to this model. So only windstorm damage is currently covered when the coconut industry is also affected by drought, diseases, and predial larceny, as I explained earlier. There's also an obsolete process to qualify for automatic insurance because the amount payable is based on the units of coconut sold to the coconut board. That's the automatic side. And historically, all coconuts had to be sold through the board. We had a copra program. So copra is the process, part of the process for oil. We had that program, so everything came through the board. Now it's a free market, so this process would be obsolete. There's also an obsolete funding strategy or financial unsustainability of the fund. Reason being, the windstorm insurance fund used to carry 5% of the risk and we reinsured the rest of the risk. Now we currently carry 100% of the risk, unfortunately, because of how high the premiums are. So I'm actually very grateful for this forum, meeting persons from like CRIF to have these discussions to see how we could deal with the carrying of the risk of insurance. There's also limited awareness and disinterest amongst the farmers. I heard a question earlier about that in relation to our farmers. Historically, the windstorm that affects coconuts only occurs every 15 to 20 years. Hurricane Gilbert, 1988, we lost over 1 million trees. The next major hurricane for us that affected coconuts was Ivan. And we didn't lose a lot of trees at the time. It was just under 10,000 trees. And then here we are at burial 20 years later. So a farmer will say, from my father time and my grandfather time, I've only experienced 2 hurricanes. Why should I be paying a premium for insurance? And you also have automatic insurance, and we're also giving them all these free benefits. So there is a limited awareness and disinterest amongst the farmers in that regard. But I couldn't identify all the challenges without having recommendations. So in the Jamaican coconut industry's context, I'll just go through the ones that are not necessarily specific or simple, like the subscription fee. So farmers don't currently pay a subscription fee to us. You just register and you get all these wonderful benefits. The subscription fee could be tied to the automatic insurance, and this would simplify the eligibility criteria for that type of insurance. 2, we could increase the awareness of crop insurance. We could also make crop insurance a prerequisite to receiving the planting program benefits that I mentioned earlier, and for access to agribusiness financing as well. Some banks don't want to provide or weary of providing financing for agricultural ventures, even though it is a business because of the risk from their perspective. But if having the crop insurance is a prerequisite to getting those loans, then this would encourage them to get it. Also, because our legislation is limited, it only speaks to windstorm, and we have to operate within the remit of that. We would be seeking to have a coconut risk management fund that would provide for loss due to the other risks, that is diseases, disasters, and predial larceny. And then 4, the revision of the insurance model, which I'll touch on a little in a few minutes, because I know I'm against time. And we could look to regularly review and update the coverage terms and rates, perhaps once every 3 years, because again, this legislation has been in place. They were forward thinking in 1945, but there are some amendments that need to be made. From the Caribbean and global perspective, from hearing all the presentations, what I find to be important to the territory is that there be agricultural boards for all the major crops in each country. So they would work hand in hand with these insurance companies. They'd facilitate the regulation of the industries. They would look into risk management and collection of verified information, because I know insurance is data-driven, and then reinsuring the risks. We could consider having a hybrid approach where the policy is relative to both the probability of the risk and the type of crop. The reason why I say this is because you have the annual crops and the perennial crops. So the annual or the cash crops, you turn over every year, 9 months to a year. But then you have tree crops like coconuts and mangoes that it doesn't turn around in that time. So perhaps indemnity is the best option for that because it's a tree. And then moving on, trying to get through this quickly, looking at the Balancing Act. I think that we have to, the common thread that has flowed through all the presentations from yesterday to today is that insurance cannot 100% cover all your risk. It is not the be all and end all. There has to be other things. So we have to consider balancing that interest or balancing the corporate social responsibility required of insurance companies to provide affordable premiums, tailored premium structures, incentives for sustainability, all of this towards the end goal of food security. We have to consider that and balance that with the interest of insurance companies to make a profit, because at the end of the day, it is a business. So how do we balance these two interests? So the Balancing Act would look at risk management conditions. I've heard Several presenters go over this. I won't go through it in detail, but the climate smart agricultural practices, proof of implementation of pest and disease management strategies. So for coconuts, through our research department and our plant pathologists, we've been able to manage lethal yellow wing disease. So since the outbreak, we haven't had any major occurrences because it's been managed. Managed to the extent if a farmer calls us and say, to their advisory officer, we have a tree that we think is LY infected, our officers will go out, cut the tree, do the necessary things that they have to do, and issue seedlings to replant. Also, timely and accurate reporting on productivity. This is a liaison between the insurers and the agricultural board, so they'll be reporting through the agricultural boards. And finally, looking at a revised model. And this model that I'm speaking about is specific to coconut now, and if there is any other crop that could piggyback on this, that would be great. But for coconuts, we should be looking to having coverage to the extent of loans or agribusiness funding. So if I'm a farmer in the east of Jamaica and I've lost most of my production, I only had non-bearing trees, it takes 3 to 5 years to bear anyway, I'm going to consider maybe I shouldn't, I don't want to wait 3 to 5 years, perhaps I shouldn't be on the ground in this, perhaps I should be looking to value addition and purchasing coconuts and processing it. I should be able to get insurance to cover the loan that I have, agricultural insurance that is. Secondly, coverage to the extent of the loss of production. So with tree crops, specifically coconuts, the tree, after a hurricane, the tree still exists, but the productivity has decreased for that year. So you might have the coconuts had bared, a hurricane came, blew off everything. You expected to get 100,000 nuts this year, you're only getting 60,000. There, perhaps, this is just a suggestion, coverage to the extent of the loss of production. And finally, coverage to the extent of the loss of a tree. It doesn't need to be 100% coverage, but something, because for instance, the average life of a coconut tree is 50 years, could be more, could be less. So the coverage could consider the income that you would have had, would have been generated in that lifespan. Because I planted this tree, I put a lot of work in it, money into it. If I could have insurance that is, can cover the extent of the loss of a tree, that would be good. Again, this presentation is not from a parametric perspective because we have indemnity insurance. We can look to do a hybrid approach. But this is what we have currently at Coconut Industry Board. The revised model is something that we're considering looking at. It's just that reinsurance is expensive. But this is what we're looking to do. Thank you.
Okay, thank you. Thank you, Nichelle. Any questions? That was a very interesting presentation. Any questions for Nichelle? Okay, we have 2 questions.
Okay, thank you. I want to make more of a statement in support of Nichelle's presentation. When Nichelle outlined the work that the Jamaica Coconut Industry Board currently undertakes, it reminded me of the operation of what the person from the Windward Islands would be more familiar with it. Back in the 80s and 90s, the wind ban, persons would be familiar with that entity, which was set up initially to provide insurance for banana farmers in the Windward Islands. And they later expanded the operation from insurance solely to be more involved in the operation and took care of they became a more proactive entity, let me call it that. And what that did was transform the industry, the banana industry then, into a more vibrant entity where there was more confidence on the part of the farmers who were involved in the sector at the time. And when I heard her present all that work that the Coconut Board is doing in Jamaica, I was reminding of what Windban did in St. Vincent, Grenada, St. Lucia, and Dominica back in the 80s. And I want to lend some support and to remind us in our deliberations later on that the commodity approach to insurance is a possible avenue in the way we look at things, and not a broad sweeping coverage for the sector, if you're with me, but more of a commodity approach. Yeah?
Okay, great. Thank you. There's a question at the back.
Thank you. Thank you, Nichelle. That was excellent. I wanted to know if you could give us an insight into what is required to engage with the insurance industry. So you talk about the board, you talk about the governance, and there are these farmers and the government, but what has the Coconut Industry Board done to have these discussions with insurance companies to acquire these products? And if there are shortfalls, what would you suggest would make it better in terms of the engagement? Thanks.
Thank you for that question. Well, I know Mr. Duncan will have some presentations on what GK has, but in the past, so we did reach out to insurance companies to see what kind of products could be developed for us, because we found that the windstorm insurance was not enough, but the premiums were just too high. I know that in 2006, again, not an insurance expert, in 2006, we decided to take on a 50-50 split in who carries the risk. So we would carry 50, the reinsurer would carry 50. Then the board took the decision that we have to just take on 100% of the risk because the premiums were just too high. So over the years, we reached out to insurance companies to see what products can be developed, or if there is something better for windstorm. But when the presentations come, I can't remember, there are 2 specific instances during my time at the organization, but the premiums were just too high, or the conditions that were there weren't particularly feasible. I won't comment on what the conditions were, given that these entities are entities that exist and would have probably changed their model over time. But we have made efforts. It's just the premiums were too expensive, but we're thankful for a forum like this. I know GK has something. We're looking to probably have conversations with them to see what else can be developed. I've learned a lot from the presentation to see if we could look at a hybrid approach between parametric and indemnity. So that is where we're going with it, because trying to change it legislatively will just take too long.
Oh gosh, we have 2 more questions, and I have a question, but but I'll give you guys first option. So let's start there.
Good afternoon. And I think I missed some of your presentation because I had another meeting, but what I got was excellent. So congrats on that.
Thank you.
How is it funded? And how was it funded the first time you did it?
See, and this is what happens when you have a limited amount of time. Yeah.
No, in terms of do the farmers pay
right, so
into it? How is that done? And how was it done the first time you did it?
So how it has been done from the first time it was done is how it's continued to be done. It's just that some of the funding strategies are obsolete. So what we used to have, well, the legislation speaks to funding through copper. Remember I was saying that all the coconuts came through us because of the copper industry. So there used to be a cess at a point. The Jamaica has repealed the regulatory part of the Coconut Industry Control Act. So the Jamaica Agricultural Commodities Regulatory Authority is who is responsible for regulation now. So the cess from that we no longer get. But there is, for every export and sale of coconuts, whether it be seed nuts, or seed nuts are before germination stage, before seedling stage, we export that. Everything that you export, everything that jelly that you sell, coconut that you sell, there is a specific amount of money. I think I had calculated it to be 25 cents US. I put it to US dollars because the conversion. And then there is also for oil. So for every ton of oil that you sell, there is a set amount of money that is supposed to be put aside. There is also investment. So we have the windstorm fund. Currently, our windstorm insurance fund stands at about $280 million. That's Jamaican dollars. I can't convert it right now. And it's funded. We've consistently reinvested the funds because we are not for-profit organization. So we reinvest the money. So any interest that we get on that is applied. And it's there for the benefits of the farmers. There's also the reinsurance, and there's a contractual insurance, which provides the premiums. But we don't have a lot of farmers with contractual insurance because, again, the historical data shows that we get a major windstorm once every 15 to 20 years. I know that there's climate change. I know that we can get another storm tomorrow. But when you're talking about the socioeconomic part of it and the cultural aspect of it, the farmers are looking at, I'm going to pay this money every year and I'm not going to get a windstorm. So that is the reality behind it, but that is how it is funded currently. And that's why we're looking for the automatic insurance part of it to include a subscription fee because they register annually. And there are other discussions that the board is having that I can't share here as to how they will fund it in a sustainable way. But one of the big ticket items that we need to look into or have to have some discussions about is reinsurance.
The last question at the back. There was a question at the back. Yes, exactly.
You mentioned the legislative process and the time it takes in terms of legislative review. That is something that came up recently at a regional focal point meeting we had. In terms of going forward with your organization, what is that part of the process going forward in terms of legislative review?
A part of the, sorry, you didn't.
And how long do you think that such a process would take?
Okay, so in terms of the legislative review, that's something that we look into. The process could literally take years, but there is a loophole that I found in the windstorm insurance regulations, which speaks to the board being empowered to change the coverage constant or the coverage rate in any subsequent insurance year. So just like 1949, the act that is there right now, it would speak to, I think, 65 Jamaican dollars for automatic insurance per bearing tree that is affected, and 2/3 of that for non-bearing trees. So the legislation has not been greatly amended, very little amendments have been made, but because of this provision that is in the legislation, we're able to change that coverage rate. So in terms of how the board is functioning in this regard, the board would be looking to look at money of the day. What would $65 be worth today? Because we can't provide for exactly the cost of one tree. And bearing in mind that the coconut industry is highly subsidized, even the insurance programs are subsidized because they get the free seedlings, free fertilizer, free weed grant, free technical advice. The researchers are literally a call away. They can call and say, I think I have gall mite. And they call the plant pathologist, he will go out there to their farm. So there are so many things that we are doing that even though reforming the insurance model is at the forefront of our minds, it's something that we're taking in stages.
Okay, so we have a last question here. Okay, sorry. Yeah, I think the question was retracted. Okay, so that was a very interesting presentation. Thank you, Nichelle. So I would like to invite John Blake from the International Labour Organization and Elizabeth Emanuel from CRIF to give us a presentation on the, so it's 2 presentations on livelihood protection policy. Yeah, livelihood protection. So actually the presentations from now onwards, we will look more broadly at livelihood, income protection, so broader safety nets for farmers. We have a presentation later on national insurance. So, John, over to you. You're taller than me, so you can.
I think so. Okay, well, I think protocol has been established, but I want to thank the organizer, FIAP, CCF, and all the other allies here in the room. I'm not a micro-insurance or insurance company. I'm also not really from the Caribbean, so, well, that's it for me. No, I'm just kidding. So, yeah, I do have a certain, hopefully, relevance to be here. I work for the ILO, the International Labour Organization. It's part of the UN. And we do develop several programs on insurance as part of our efforts to decrease vulnerability of the target groups that we work with. So, for instance, we have been working with fisherfolk. We have been working with farmers on 5 of the islands of the Eastern Caribbean. So, from that perspective, I'm going to speak a bit from a generic perspective, and then we go into more detail also with the presentation of CRIF, which is of course a very important ally in this process, more into detail on the livelihood protection policy and also into the coast program. So yeah, first, how did I get into the Caribbean? Well, there it is. No, I'm just kidding. I'm here because I want to do very important work, of course. No, of course, but when we picture from the outside the Caribbean, we tend to have a bit of a romantic view on what the Caribbean is, a bit of unilateral view. But unfortunately, of course, we are in the forefront, we are in the front line really of climate change. And we face this reality on a day-to-day basis. So we had, unfortunately, some very huge examples where this tremendous losses have been faced. For instance, Hurricane Ivan in 2004 had a devastating impact on Grenada. We can also see the average cumulative damage of natural disasters in the Eastern Caribbean was equivalent to 66% of its annual GDP. So there are great concerns, but we have to be optimistic also and look at what innovation and technology can bring to make us less vulnerable to these shocks. Here again, we see how the economic consequences of cyclones and disasters in general has been hitting the Caribbean and have been incrementing over time. We have data until 2017, but unfortunately the consequences of natural disaster are growing logically also because of the phenomenon of climate change. Here's some more depressing pictures, sorry about that. So ILO, we see insurance as an important facilitator to reduce vulnerability. I already mentioned we often work with the most vulnerable target groups. We have a clear development goal. So we tend to work with the most vulnerable, but also to promote stronger enterprises. We also believe if the insurance is more widely available, then also enterprises can be stronger. Particularly, we have been looking in a product that will be more detailed by Elizabeth later on, which is the livelihood protection policy, which is a parametric insurance product that covers certain losses based on a trigger. I'm not going to explain to you what parametric insurance is, but it triggers based on excessive rainfall and high wind speed in particularly. This has been developed under a certain project, but as I said, Elizabeth will be speaking more in detail about this. So, unfortunately, we have two sides with regards to insurance, and there I can speak more of the expertise or of the work that we have been doing in the past 2 years. I was managing a project for the ILO that is called the United Trust Fund for Human Security, that had a specific project to build a more resilient Caribbean, and it was focused on St. Lucia, Dominica, Grenada, Barbados, and Antigua and Barbuda. So I had the opportunity to visit these 5 islands with different purposes, to speak, for instance, with key stakeholders like the Ministry of Agriculture. I've spoken with most of them, but also speak with the productive sector. And I think this is a key issue that we need to address. I had the opportunity to work with producers' associations on all of the islands, being from fishers or from farmers. And immediately we were faced with the difficulty that the financial literacy levels are still really low. So before we even can start to speak about insurance, we have to speak about more financial coping strategies in general. So, of course, as ILO, we wanted to work on both sides, on both the demand and the supply side, and strengthen supply, where there's a lot of need also, because there's still a lot of misunderstanding also on the side of brokers and people that work in insurance on parametric insurance. But unfortunately, as was mentioned, some processes are rather slow, so the introduction of certain products was delayed. So we focused more on the demand side. And of course, this was part of a small project. Although it was on 5 islands, it was a project of only 2 years with limited outreach somehow. And this is a message I think that I want to leave, and also to bring back tomorrow on how we're going to work this demand side. Because if we really want to have a scaled up type of insurance in place, and we need somehow scale, then we also need buy-in. And buy-in is very limited for different reasons. It is limited because of cost, it is limited based on misunderstanding, it is limited based on a subsistence type of enterprise that is most common. So there are many reasons, but the fact remains that we need to work on this side. In our work, we believe that, of course, insurance serves to protect, but it also serves to enhance and to promote stronger livelihoods, to promote stronger enterprises. What we have seen in different contexts is when you have insured companies, they are also more prone to invest. If they are not insured, of course, with these high risks that we have, particularly here in the Caribbean, they often spread their risk or do not innovate or invest. So here below, you see some very concrete examples. It's always more easier to see it with numbers. So in China, for instance, the introduction of insurance was responsible for 27% higher investment in a certain specific commodity. In this case, it was the pigs. In Ghana, likewise, we see that insured farmers increased their expenditure on fertilizer by 24%, and the area of land cultivated by 70%. Below that, you can also see the reference to the specific studies. But I think this is a very important and interesting detail, because often we look at insurance solely from the perspective of protection, which of course is key. But here we have some data also that reflects more on livelihood promotion, on how it really can enhance productivity. And this is not a minor thing for the Caribbean. If I look at productivity, productivity has been lagging in most of the Caribbean islands for the past 2 decades. So if insurance can play a certain role in increasing investment and innovation, and it can also trigger somehow productivity. Of course, it's also a very important mechanism for the governance, for the government. We look at it from a perspective of the ILO social protection. We see it as a mechanism that aligns with social protection planning of a government. It's also important that vast data can be collected also to generate a more evidence-based public policies. From ILO, of course, as part of the UN, and I think as part of the commitments of the islands itself, also it's important also to reflect on how insurance, in this case of the livelihood protection policy, is linked to the SDGs. And it's, as you can see, it's linked to quite a lot of SDGs, to number 1, no poverty, to no hunger, to good health, to gender equality, and reduced inequalities in general, and climate action, of course. So we see the livelihood protection policy as a very important and critical tool from different perspectives, as I have been trying to explain. We think it aids in a broader effort to address climate change and to achieve the outlines, the objective outlines in SDG 13. We think it can be a significant contribution through financial protection, promoting resilience and supporting sustainable practices. And another important element, I think, is also we have mentioned that we can see this type of insurance not only at the level of the individuals, but also at the organizational level. So in this, the ILO, I think most of you know the ILO consists of a certain tripartite basis, the employers' organizations, the trade unions, and the governments. So in this also, the ILO wants to be instrumental and also discuss the opportunities that can be there with the Employers Association. In this particular case, we mentioned the one of Jamaica and Trinidad, where I'm based, ECA. So yeah, as I mentioned more extensively at the start, I think significant effort is required at all levels, particularly also on the demand side. On the supply side, I think we see very interesting examples as have been given by my colleague panelists. But on the demand side, a lot has to be done to really get this buy-in to scale up a certain product. Another mechanism that is important is to work with organizations, of course. Otherwise, it's very difficult to do. And a third, I think, very important part that we really need to explore a lot further, which is beyond my capacity in the presentation itself, is the sustainability of the model. We have already seen the examples of Europe, where they already start to discuss quite openly the sustainability of the different models and how to look into the future when a phenomenon as climate change is increasing. How are we going to subsidize the future, as it's a heavily subsidized product? So So I think that's all on my side. I would like to give the floor now to Elizabeth from CRIF. Well, I'm playing moderator now, sorry about that. Thank you.
I think everybody seemed a bit tall. Is this okay? It's too short. It's on our computer. Seriously? Yeah. All right. Good afternoon, everyone. And I'm back again. How do I wake you all up? Maybe we all need to stand and, just do something. You can sit and do it, but let's wake up. Yes, wave your cards, like wave your flag, We're in the Caribbean, really. So, all right. So I'm back to really just add to the presentation that was just done and to share a little more and more specifically about inclusive parametric insurance schemes in the Caribbean that CRIF are part of. What I think may be interesting in the presentation is that other than Nichelle's presentation, I will tie everything together from the others because you may get some surprises, GK, from my presentation. All right, yesterday, David and I did not finish, but I know you thought we finished. But if you need any information about CRIF, we do have a really nice video that you can use that's on our YouTube channel. So I'm not going to discuss CRIF within this presentation because I think we did a lot of that yesterday, but this really does it in a nice whiteboard format. So go on our YouTube channels, pull it down and share it. So we're looking now at inclusive insurance. And one of the things about parametric insurance that we discussed yesterday is that we can make parametric insurance at the sovereign level, what the government purchases, inclusive, because that depends now on how the payouts are used. And yesterday, we presented several examples of payouts getting into the hands of people that need them the most, trying to dispel the notion that when a government gets a payout, all it does is fix a road or fix a bridge or some infrastructure. And I'm not sure if our last presenter, if you've started to use payouts as yet, and if those are going to people. But we have numerous examples of that insurance going to farmers. But of course, we can do more because as many of our Caribbean people will know, we are very proud as a people. And many people don't want handouts. So they see knocking on the minister's door as a handout, and they may prefer to purchase insurance. And even if they are not necessary, let's say wealthy, but they understand, when they do understand insurance, there is an interest to access it. So that's one way. We can look at micro-insurance mechanisms, but we could also look at making social protection systems more shock responsive. In other words, when we think about, many people have this thing that, oh, social protection don't matter to me, blah, blah, blah. I could afford insurance. And you see, I talk a lot to different groups. I don't know if I mentioned this yesterday, but during Hurricane Maria in Dominica, that entire country became vulnerable. One of the first tweets that came out of that country was from the Prime Minister in the night to say, the hurricane is just hitting and my roof is off. His roof blew off. And my thing with that was, oh my God, then Dominica is going to be in a really bad way because this person ought not to be vulnerable. But we can all become vulnerable at different points in our lives. And that is where social protection comes in. So when we talk about shock responsiveness of a social protection system, we're talking about that system expanding both horizontally and vertically. It expands to ensure that if people who were not normally getting benefits need a benefit, the system can respond. And those that are in the system currently may need additional benefits because of that shock. And one of the things about inclusive insurance is that it can become part of your social protection system to make that system more responsive in the face of exogenous shocks related to, say, for example, hydrometeorological hazards. And finally, we will discuss today just looking at how we close the protection gap with insurance. Now, when we think about vulnerable groups, there are so many vulnerable groups in our society. We have persons living in poverty, persons living below the poverty line, we call them, but I always like to think of the vulnerable, not just those below the line, but let us think of, those high tension wires and the little blackbirds that sit on the wire. And when the wind blows, they all kind of fly away. Let's think of the poverty line as that high tension wire. So there are people below it, and there are people immediately above it. But if there is a shock, there is a percentage of people that falls below it, right? So those people who are immediately above the line, so like Jamaica, you like to say, Minister Clark says we are at 9% poverty. And Liz says, okay, then we have about another 20% of people just above the line. So we have a shock. If Beryl had hit the entire Jamaica, plenty of people was falling below that line, and they become vulnerable. We have small-scale farmers, fishers, seasonal tourism workers, right? Many of the people working in resorts are not permanently employed. So you have a shock, they go home because we have no tourists. You have day laborers, so construction workers building houses, taxi drivers who are aligned or connected to the tourism sector, construction workers. We even have musicians and small entertainers. So when we think of St. Lucia and we think of Sandals, we don't have Beanie Man and Bounty Killer and, give me another one, getting old, so, huh? No, I don't know. Marshall, Montano, any of those. We have people that we've never heard about. They're entertainers, but they are impacted by shocks, right? We have micro and small businesses. In the Caribbean, when we say micro, it might be a 2-person business. Women and girls, unattached youth. In the Caribbean, we're seeing an increase in youth who are not, they are what we refer to as NEET, right? They are neither in education, employment, or training. We have persons with disabilities, rural populations, rural women. We have the LGBTQ plus populations, children living in poverty. We have barrel children in some countries. We have children with disabilities, teenage girls, children in state care, homeless persons. We have migrants, which isn't even here. So we have a list of vulnerable persons. And how are these persons, we must ask ourselves, how can they be impacted by climate-related events? So CRIF is working, we are working in the macro space at the sovereign level, but we're also working in this sort of micro space. And we're working on 2 products in the Caribbean. Microinsurance developed for fishers, and many of you would have heard the term coast. And if someone could tell me what coast means, then you'll get a prize. And whilst I'm at it, I need someone, where I sit, we actually have coast brochures. The idea was to hand it out to you. It's really tiny things that will not add any weight to your luggage. Because I'm not taking them back to Jamaica, so please. We also have the livelihood protection policy, which my colleague from ILO spoke about, which is the climate risk adaptation. It's right on my desk behind you, an envelope, a nice yellow-colored envelope, right on the chair. And this is useful, the climate risk adaptation and insurance in the Caribbean project, which has produced the livelihood protection policy, also called CRAIG. And this particular product is useful, and I'll show, for scaling up shock responsive social protection. So as I have said before, microinsurance is a risk financing and can be a social protection mechanism at the individual level. No, I need more than 5 minutes. Right. Microinsurance helps to protect the livelihoods of these very low-income persons against specific perils associated with climate. Microinsurance can actually become a key component of a country's financial inclusion policy. How many persons in here know if financial inclusion policies are being developed in their country? Anybody? Jamaica has a financial inclusion policy being developed, and how can microinsurance help with financial inclusion? If you go and you purchase as a farmer, you're not in the banking system, but you can get access to this insurance product, it can actually improve your credit worthiness over time. And then eventually from that mechanism, you'd get into the financial space. So what we're saying is that microinsurance provides a mechanism through which vulnerable groups can access insurance to protect their livelihoods, to protect their small businesses, so to cover some of their losses following a natural disaster. And that is what makes it a little more inclusive, right? But I'm going to speak a little bit about fisheries and the coast product. Now, the coast product, if we think about fisher folk, after a climate-related event, our fishing communities suffer impacts such as loss of productive assets. We've seen all over the Caribbean following Beryl the issue with boats, vessels, fishing gear, and also ice facilities, for example. They end up getting reduced coverage and quality of public services, such as electricity, fueling stations, piers, access roads, etc. And these losses hamper them from going back out to sea to deliver products to market. And of course, in the Caribbean, many of our fisher folk are in the poorest communities, and we see impacts on fisher folk all the time. But I want to share a closer look at the impacts on fisher folk and make a case for the coast policy. And this is a study that was done in Jamaica, which says that about 84 hours or 3.5 days before a severe weather event, fishers are asked to commence preparation with a view to evacuation and coming back on land. 60 hours before the event, these same fishers are advised to evacuate immediately and get on land. And those on land are told, do not venture out. 36 hours or 1.5 days before an event, a final advisory is issued that all preparation should be completed and you should be back on land now and only return when sea conditions are normal. So the time period in which a fisher folk is unable to go out and make his living is about 1.5 to 3.5 days pre the storm, plus the duration of the storm. So if we think of Beryl, we may think of 2 days. And if you adhere to the warnings, 3.5 plus 2 is 5.5, but then you may have damages. So you're looking at time to repair any damage of equipment, such as boats, your fish pots, etc., and time for sea conditions to return to normal. So your livelihood as a fisher folk becomes impacted before, during, and after an event, right? So the coast parametric insurance product which was launched in 2019 in 2 countries, St. Lucia and Grenada, in collaboration with the US State Department, the World Bank, and CRIF, provides cover or insurance cover, parametric insurance cover for losses attributed to the fishery sector due to 2 things: bad weather conditions, high waves or heavy rainfall, and or wind and storm surge associated with tropical cyclone. The policy is it's a sovereign product because governments purchase it, but it has micro insurance elements because the payouts need to go to the fisher folk or for fixing boats or for repairing fisheries infrastructure. And it ought to be, CRIF makes payouts within 14 days of an event, and therefore 14 days later, the fisher folk should receive their payouts. Now, what that entails is ensuring that, yes, the payout is rapid from CRIF, but how do we know who the fishers are? So COAST includes a mechanism to ensure that at all times, and this is the ideal, that your fisheries registry is up to date. So one of the benefits of COAST as a country seeks to get COAST is that we help to clean that fisheries database, because people from 1975 are in the database. Tom Brown, who died how much years ago, is in the database. You know, Tommy, who don't fish anymore, is in the database. And if you do that, you're going to have impacts on the disbursement of benefits. COAST supports the livelihoods of fishers and others in the fisheries industry. We got to remember the fisheries value chain. So when we have Rosalie, is Rosalie? The fish thing is Rosalie, right? Rosalie on a Friday night, the party with the fish, those people, they are part of the fisheries value chain, and therefore COAST is designed to cover them. The people at the bottom of the fisheries division or the fisheries in St. Vincent, the fish market, those women ought to be covered under COAST, for example. So what COAST is designed to do is to put money in the hands of fisher folk very quickly. It provides a mechanism for dissemination. But COAST is not just about insurance. It is more than insurance, because part of what we're doing for COAST is to also help to build back better, build back more resilient fishery sectors, and also It also looks at building capacity amongst fishers, looking at more sustainable ways of fishing, for example. So we're looking at the development of fisheries management plans, looking at linking the sector more closely with the blue economy, etc. And these are some quotes from the fisheries industry. It says here, for example, it is difficult for the cooperative because right after the storm, the fishermen want to go out, but they don't have the finances to recover. None of the societies or the people in the cooperatives have access to insurance. This was before COAST, right? This one is very interesting, and it was from Mr. Crafton Isaac, who was part of the development of the COAST product for Grenada when he was the former chief fisheries officer. He says the sustainability of the industry is important in terms of protein intake, because that's very important during recovery until things like farmlands can recover. And as I said before, COAST, we're looking at establishing fish sanctuaries, management plans, working with fishing communities to identify best practices. So COAST is indeed more than an insurance product. And finally, we're going to look a little bit, very little, at the livelihood protection policy, which is a product developed under the Climate Risk Insurance and Adaptation in the Caribbean project, which is a partnership of the Munich Climate Insurance Initiative, the ILO Impact Insurance, the CRIF, and also local insurance companies. So our first partner in the development of the LPP was actually GK. And GK offered that product for 2 years, consumed the knowledge, that the products provide and created its own product. So we're proud that GK was part of the project for several years. There were payouts and they're on their own providing access to insurance for vulnerable groups. Because remember, in the Caribbean, we're not short of vulnerable groups and vulnerable people. So it's not a competition per se, it's about ensuring that we capture as many people as possible. So again, this product is a weather index-based product. In this, it's always been based on high rainfall and high winds, but that doesn't mean that a product cannot include, for example, drought, etc., other perils. Again, targeted at individuals. We've always said it's targeted at a range of individuals and designed to reduce vulnerability. We're currently working in 5 pilot countries: Belize, Grenada, Jamaica, St. Lucia, and Trinidad and Tobago. But to our disadvantage, once Grace moved away, we also had a new insurer, so we're working with the Guardian Insurance Group, and of course, we have to get regulatory approval. So we have to go back through the process that we would have done with Grace initially, and to get regulatory approval. And as I will discuss tomorrow, our regulators are not keeping a pace with the demands of the market. So what I'll do is stop here and share with you a very short video on the LPP, so you get a sense of the cost, etc. We are planning to roll out, and we have gotten approval from Jamaica and St. Lucia to actually roll out the product. So I'll ask my colleague online, Gina, to actually, I'll stop sharing, and she will share a 1.5, 2-minute video. I actually had half an hour, but I've cut it down. So, Gina?
Understanding how the LPP works, the nuts and bolts of the LPP. When there is a storm, hurricane, or heavy rainfall, our dedicated satellites measure the local rainfall and wind speed. We collect the data for each parish, location, municipality, or county or part of the island depending on your country, and compare this information to the trigger levels you choose in your policy or policies. Remember, your LPP is triggered based on the volume of rainfall or the wind speed and the trigger levels you chose when you purchase your policy or policies. But let us look at how policies are triggered a bit more. Policies are triggered based on the values of wind speeds or rainfall levels. These trigger values are based on actual weather conditions in various areas and are different for policyholders depending on where they live. The insurance payout amount is calculated as a percentage of the amount of coverage that was purchased. The more extreme the event, the larger the payout. What is the price of the LPP? The price of the LPP is based on the amount of coverage that you purchase. You can purchase coverage of between $100 and $1,000, and your premium will be calculated based on your location and the level of exposure to rainfall and wind at that location, that is your parish, county, or municipality, etc. So as an example, let's say that you are a farmer in St. Mary in Jamaica and you wish to purchase coverage against rainfall and you want up to $1,000 in coverage. Your premium will be calculated at 13% of the coverage based on the exposure of St. Mary to rainfall. In other words, for coverage of up to $1,000 you will pay $130 or Jamaican dollar equivalent for that coverage. Similarly, a farmer in Clarendon, Jamaica, who wishes to purchase the same level of coverage of $1,000 will be required to pay $120 or Jamaican dollar equivalent, which is based on the lower exposure of Clarendon to rainfall. Similarly, if we look at 2 farmers in Trinidad, location of farmer 1 Pinal/Day Bay, exposure to rainfall, 10% of coverage. Coverage required by insured, $1,000. Price of LPP, $100 or TT dollar equivalent. Location of farmer 2, Chagonas. Exposure to rainfall, 7.5% of coverage. Coverage required by insured, $1,000. price of LPP, 75 US dollars or TT dollar equivalent. What this is saying is that in rain-prone areas, the premiums are a bit higher but still at a level to keep the policy affordable. After you pay your premium, you will have to wait 10 days before you start receiving protection from your policy. Your policy is valid for 1 year. If a policy is triggered, you do not need to make a claim as an irregular insurance policy. You will be automatically informed by Guardian Insurance. Say you purchased a policy for rainfall. If a certain trigger level is met, say 150 millimeters of rainfall in 24 hours, and your policy triggers, then we send you a text message alerting you that will receive a payout. Your payout is then sent to you. What are you waiting for? Take that bold step to protect your livelihood, your family, and your future against the impacts of climate change and the increased frequency and intensity of rainfall events, hurricanes, and storms. Purchase 1 or 2 or up to 10 LPP policies today. Contact CRIF@pr@crif.org for more information on the LPP or your nearest Guardian General Insurance office. CRAIC, the Livelihood Protection Policy, LPP, protecting you and your livelihood from weather events, reducing vulnerability, building resilience in the Caribbean.
Thank you, Liz. Any questions for Liz and John? Any questions? Okay, there's a question at the back.
Good afternoon, everyone. Thank you very much, Liz, for waking me up. I have been in the meeting from yesterday, and I just woke up because I heard fisheries. So I'm up. With regards to first of all, in your circle, how many options have you seen for insurance in fisheries besides coast, sorry? And the second question is, what are the current trigger levels in fisheries? And if there is a trigger level that we are interested in, what can we do to get it on your list of trigger levels? Thank you. Oh, by the way, coast, from what I know was...
Okay, so you're from St. Lucia, right?
Yes, I am.
Okay, so you do have a coast policy in St. Lucia. And what we do every year as part of the policy renewal process, and maybe in hindsight is something that we need to ensure that the Ministry of Finance actually invites your department to discuss, just as many countries invite the Met Service and they would invite the national disaster offices. We probably need to ensure that we invite the fishery sector to discuss the policy elements and what would be best suited to the fishery sector. I think that was part of your question. And the other part, right, so that is where we would actually discuss the trigger levels. But you also asked about other options. Coast, as many of you would know, it was the first ever policy focused on fisherfolk when it came in 2019. And as I said before, it's a sovereign level product purchased by the government with the payout going to fisherfolk. One of the things that was interesting in St. Lucia in the development of Coast was that your cooperatives, for example, the one right outside the fisheries office was very big on this. Which one is that? The Castries Cooperative, right? They actually want to help pay the premiums for Coast, right? But now we have other products. So we're looking at LPP. The Livelihood Protection Policy was recently approved in St. Lucia. And that becomes a product that the cooperatives can purchase on their own, on behalf of their members, which is something that that same St. Lucia, that Castries cooperative wants to do, as well as an individual fisherman can actually purchase that cover as well. So St. Lucia, the regulator, has approved that product. So we're going to try to see how soon we can actually roll it out in St. Lucia. But it would be important for the fisheries division to look at the larger coast policy and determine the policy conditions that they want to set as well. All right, so it would be, David is here and he is our CRMO. So do you want to add anything, David? Or I think it's something that we will put down on our agenda going forward.
Great. Any more questions? Yes, we have one here, down the middle.
Afternoon. It's not pleasant. Good afternoon. I'm not sure if this was covered, but one of the biggest issues that our fishers face is their gears, like fish pots that's in the sea. And we get a lot of complaints because hurricane come, storm come, and they go back out and say, oh, we can't find our fish pots. That's not something that is covered. It is?
Right, because the payout can actually be used to repair or replace fish pots.
Fish pots. So.
Right, and just recently, just Sunday in the paper, I was in Jamaica, I was reading an article of the fisher folk that were impacted by beryl and really got a sense of how expensive or how intricate some of the fish pots are and the price of the fish pots, for example. So yes, on the coast, the payout that is received, we don't dictate how the fisher, if the fisher folk receives a payout, would use that payout, right? So if they get a payout, they can use it for livelihood because we saw, for example, that they're not able to go back out to sea immediately, right? Their boat may be damaged, so your boat has to be repaired. So you can use it to live as your weekly income, but you can also use it for losses that you incur to your trade. And I think when Grenada comes on, they will actually say that the actual first payout on the coast was for beryl, which provided the government of Grenada with about $1.066 million US.
Thank you.
Okay, great. So thanks for your questions. I'm going to now invite Mr. Duncan from Grace Kennedy to give his presentation.
All right, good afternoon, everyone. Let me say that again. Good afternoon, everyone. Boy, we need to really wake up in here, man. That's good. All right, so Liz tried just now, but we're going to wake up in here this afternoon. This particular seminar is a very important one, right? All can agree? All can agree? All right, let me hear you know. We are all family here. All can agree? All right, cool. So I want to firstly thank the organizing body for this lovely seminar. It has been very informative, very interesting, and I know a lot of us will go back home with a lot of solution and ideas coming from what all our colleagues have shared today. And so I just want us to take a little time out today to say a big thank you to the organizing body. All right, so today my presentation, as you can see, is based on resilience to climate change and global warming, right? And in the interest of time, I won't spend too long on these two areas because everyone in the room is already aware of what is climate change and what is global warming, right? But I'll still touch on a little of the stuff that I think is very important. Right? So coming into this particular presentation or this seminar, it led me to do a little research to gather some information to present to you. And what I found was information that was very interesting and to some extent alarming, right? And so when I looked at what some data from NASA, we recognize that the Earth's average surface temperature in 2023 was probably the warmest in the record books. So in the 1,300 years that we've been keeping record, we are presently in that era where we're experiencing the warmest temperature, right? Our 10 most recent years has proven to be the hottest years on record, right? Our next slide, my fellow colleague earlier actually showed a slide, but he did not show from start till finish, and so I'll just add to it. Now this particular, oh, let me go back, sorry guys. I guess it's not showing technology, eh? So this particular diagram is what it looked like before in the 18th century, right? Where the world looked like this, all blue, right? My representative would have shown a diagram earlier that showed that this has changed significantly. So 2010 to 2019 has been recorded as the hottest decade in our history of record keeping. The previous decade was the second hottest decade, and 2020 to 2030 has proven thus far that it has exceeded the temperatures that we have seen over the last 2 decades. And so it is important that we look at how is it as a group, as a body, as different countries throughout the world that we try to mitigate, reduce or prevent, and also to become resilient against climate change. So I'm going to share with you a little about who GK Insurance is. Liz would have given us some insights just earlier, but we're a lot more than that. Grace Kennedy is a public listed company, both in Jamaica and the Trinidad and Tobago. Right? It is the parent company of a subsidiary of companies. And we pretty much operate in the food segments as well as in the financial segment. Our food segment spans primarily in Jamaica, the North and Central Americas, Africa, and Europe, right? Our financial segment primarily operates in the English-speaking Caribbean. And our financial segment includes insurance, investments, remittances, banking, and so forth. So Grace Kennedy is here, and why would we have chosen to look at a product that is about weather and climate, right? It's because it is important to us as we look at our contribution and our commitment to the ESG, sorry, right? And so we have looked at a couple pillars that we feel are important to us as a company, right? Because we value our clients, we value our communities, we value our stakeholders. So we have looked at defining the priorities, integration and execution, performance monitoring and communication, all which are important to that ESG process. Now we're going to look at Grace Kennedy General Insurance, where I am from. We're a company that is primarily operating in the general insurance market. So we're licensed to sell all classes of general insurance. We're one of the top 3 general insurance in Jamaica, and we are solely owned by Grace Kennedy, our parent company. Why is it now that we have looked at parametric insurance, and why is it that we decided to go into this market, right? Some of the things that we looked at in Jamaica based on our present setup was the fact that motor insurance, for instance, was mandatory in Jamaica, right? 15% of the Jamaican population has health insurance. Another 30% of the Jamaica labor force has life insurance. But we recognized that there was a underserved market that we could tap into. And so Grace Kennedy has decided that this is an area that we want to look at to see how best it is that we can assist our medium to low sort of base clients that we want to work with. So we looked at microinsurance, and microinsurance, as it suggests here, is targeting products of the population that are generally underserved by the insurance. And so when we looked at this, we wanted to ensure that the products were accessible. We wanted to ensure that the products were affordable. We wanted to ensure that the products were simple and that the regular man could actually look at it and actually purchase the product. So we looked at a few other stuff, and that was, we looked at the fact that we wanted to ensure that the product could be understood by anyone who was interested, right? So it didn't matter where you were, who you are, we wanted to ensure that this product was something that everybody could understand. We wanted to ensure that it is not a product that relies on the exact location of the farmer, right? And we didn't want it to be limited to certain information, right? And so we tried to ensure that this product that we're about to share was one that everyone could partake of. So whether you're considered a high-end farmer, a medium-sized farm, a small farmer, this product would be able to pretty much facilitate what you have, right? And so in the design process, what we did was look at interviewing several farmers and fisher folks, and to get an understanding of what were their concerns, what were their issues, what were their fears, and looked at collating that information with a lot of data that we would have received from our partners or new partners, and ensuring that at the end of the day, what we were building out was something that would meet the needs of all. So in our pricing consideration, we looked at a few things, right? We looked at the different seasons, and so this product presently has 3 seasons. I'll share with you that our previous module had 2 seasons, and coming back from feedback from our farmers, they would have indicated to us that why is there a gap? Why is there only 2 seasons that only captured 8 months? And so we went back to our partner, and we have built out a product that now has 3 seasons. It spans the entire year, and as you can see, season 1 starts in April and it goes on till July. Season 2 starts in August till November, and season 3 starts in December and goes to March, right? In all 3 seasons, we do offer excess rainfall and drought as coverages. However, for our hurricane wind, it spans 2 seasons, which starts from April until November. So our product is called GK Weather Protect, and it is basically a parametric insurance product that can protect farmers from certain weather conditions. Now, initially when we rolled out the product and we were doing presentations, a lot of farmers thought this product was primarily for crops, because on our flyers on our page we had a picture of crops, right? And so we had to redesign our product to ensure that all farmers understood that this product is not unique to what you're farming. What we're actually covering are the perils. And so this product was set up to cover 3 perils, which is excess rainfall, drought, and hurricane winds. So what that means is irrespective of what you do, whether it be fisheries, whether it be bee farming, whether it be crops, whether it be livestock, this product doesn't matter what you're farming because we're covering the perils. And that's what is so unique and important about this particular product. I said the presenter giving me 5 minutes. Don't worry, you will, my host, sorry, don't worry, we will end as quickly as possible. So let's just look at excess rainfall, right? It covers extreme amounts of rainfall over a short period of time, such as those caused by tropical storms and hurricane, right? And to the lower part of the screen, what we're showing is the triggers, the different triggers that can be met, and once those triggers are met, it gives you the percentage payout that we give to farmers, right? The next slide shows us the drought peril, which is pretty much the inverse of the excess rainfall. So it covers the lack of rainfall accumulated over the season. Now, with this particular peril, what happens is that it is calculated at the end of the season, right? And so it's basically the inverse of how the rainfall, excess rainfall works. And again, at the lower part of the screen, you can see what the thresholds are, what the triggers are, and what the percentage payouts are. The next peril is hurricane winds peril, right? And it covers hurricane winds at a parish level. Triggers are based on the maximum calculated winds within a 40-kilometer radius, right? Now, this slide is very interesting because this seminar, as everyone knows, should have been in July, right? Right. And due to Hurricane Beryl, the seminar was pushed back to today's date. Now, interestingly, at that time, we didn't have enough data. We would have only recorded, based on what my fellow colleagues indicated this morning, a freak storm in 2023 that we had some payments, right? 27 farmers received payments. But Hurricane Beryl passed through Jamaica and impacted 7 of our parishes and impacted over 120 farmers, right? Of which, based on the different categories, 70 of those farmers would have received payouts coming from this product, right? So Hurricane Beryl was a test for us. It allowed us to capture several information that we now will be using to even improve this product further. And it is something that is a testament that this product does work. So my last slide here today speaks to the coverage, right? And so this slide is pretty much showing all the seasons covered. So as said before, there is 3 seasons that cover drought and rainfall, and 2 seasons that covers hurricane winds. And the product for all seasons start at $50,000, right? So it starts as low as $50,000 and it goes up to $1 million. What we have recognized is that we have a lot of medium to large farmers that have actually approached us to say that they would like coverage for higher amounts. And so we have that set up in place that we can offer coverage to up to whatever that farmer needs, right? So it's not specific to the limit that you're seeing there of $1 million. We do offer coverage. Now, one of the good things with us is that we have not only built out this product, but we have recognized that there are farmers that may still not be able to afford these coverages. And so we have worked with the government of Jamaica to actually look at them subsidizing a portion or the first layer of this cover. And so in 2023, we would have come to an agreement with the government that saw them actually giving us 1 year worth of subsidized coverage for our farmers to the tune of the first year coverage for any peril for any season or for one season, sorry, that they would want, right? We have gone back to the drawing board with the government, and we are now looking at a 5-year plan, right, to ensure that it is much more sustainable. And we are almost at that place of signing off on that agreement that will allow us to have a 5-year setup that will see farmers benefiting for at least the first tier cover for this product, right? So this is a product that can work, has worked, and a part of our plan is actually to look at how do we not only do it in Jamaica, but roll it out to the region. And so we have looked at a CARICOM plan. We have approached a few countries already, and we will look at trying to perfect this and then rolling it out as quickly as possible. Thank you very much. That's my presentation. You want me to ask?
Okay, thank you, Mr. Duncan. So we'll take questions for the entire panel now. We will take questions on Mr. Hines' presentation about, the broad range of regional insurance schemes we've had over the years. We'll take questions on Ms. Blackwood's presentation on the coconut industry in Jamaica, and also from ILO and CRIF on the various products. Coast, I think there's a prize still to be won for saying what Coast is, right? Especially now you have the flyers in your hand, so you can raise your hand and say what Coast is and win a prize. And of course, the presentation we've just had from Mr. Duncan on Grace Kennedy and the various products they offer. So over to you. Questions, please, for our esteemed panel. Okay, we have one at the back.
Okay, thank you. Okay, I'll start by asking the last presenter. I just want to know what currency, your payouts, what currency are you looking
So the currency that you're seeing is Jamaican. That's the coverage that you're seeing in Jamaican dollars. If you were to break that down, it's coming to about 361 US dollars, just to give a comparison. Okay. Right? And just to add the premiums, which you would have not necessarily seen the dollar figure, but the percentage for drought and excess rainfall is 7.5%. That works out to be about, if memory serves me well, about 36 US dollars. And for the hurricane wind, 5%, which is working out to be about 15, 16 US dollars. If memory serves me well.
Okay, thank you. I'm very interested in the prize. So can I solve the puzzle or answer the question? Coast, the Caribbean Oceans, and Aquaculture Sustainability Facility. Yay.
Since the mic is here, can I just ask the gentleman what percentage of his members, if he, sorry? Thank God. I don't understand now. I was just asking what percentage of your members represent fishers?
I don't think I have that data, but I can definitely share it with you. That's an easy poll for us. That's very easy for us to pull for you. So you can actually contact me after, and definitely I'll share that.
Alice has asked me to say something about the prize. I'll bring it for you tomorrow. Serious, I'm sure there's something upstairs.
Okay, hi, good day, everyone. The livelihood protection, my solution colleagues would have remembered or should have, that was being offered many years ago by Bank of St. Lucia, EC Global. They did offer a livelihood protection program, but it was withdrawn, I suspect. I don't know why. It may have been excessive payout, possibly, a trigger, and they got, money was lost or something, because I would think they're in it for the profit at that level. So we've seen that livelihood protection. I did subscribe to it a couple of times, but the other thing was it was offered to anyone. Mm-hmm. It was not targeted to farmers or fishers, but everyone. And a lot of people saw it as just a means of getting a little bonus just in case. What really caused a major issue with it, I think the last time it was actually offered, we had a storm, and I think the trigger was missed by 1 mile, 1 kilometer or 1 millimeter of rain. And I mean, we got serious damage. Banana fields were flattened. I got flooded on my farm. I'm a farmer. And there was no trigger. The lower level was not triggered at all. And people were just, we were taken aback by that. Because I saw the triggers on the GK.
Right.
So that's my contribution. We've seen that thing, and that's the issue I have with it. We've actually seen a situation where you get major damage and the trigger threshold is missed. So are you guys plans, is there something that you can do, or have you amended that to make it work better?
All right, let me respond. Okay, so remember when I said earlier, so at that point, GC Global was owned by GK. And we were our implementing partner was GK at the time. Yes, what you said is true, because the product as developed suffered from extensive basis risk. I think it's more, correct me, David, the LPP, both of them, even the GK one we heard, it's more like a cat in the box, right? And David went through yesterday discussing basis risks. We have made attempts to do things differently under this one in terms of what we're doing now. So I can't speak for GK and basis risks now, but we're also looking at dividing the countries, looking at rainfall in specific locations. So you noticed in the video, which I apologize, it was really loud. It's still kind of ringing in my ears. Sorry, I don't know why it was so loud. If you looked at the video, we're trying to more accurately, it's not one price across the board. It's also based on where you're located, the frequency of rainfall, et cetera, So we understand that it's a product that is affected by basis risk. That was a big issue for CRIF in St. Lucia, because whilst we were not the seller of the product, we were associated with it. And what it did was your then Minister of Agriculture called the CEO of CRIF and said, well, what's going on here, right? It was a big thing. And it is something that, even though we're part of this project, we see it very much as sort of knowledge-based, knowledge building in that particular space. But I think we're also, and David, you can pick up the mic. I think we're also looking at reviewing, we're looking more at reviewing this product and bringing it more in line with the kind of products that CRIF sells, which benefits from better modeling approaches, more data, et cetera, et cetera. I'm going to ask David to add to my response.
I think you covered most of it. I just want to also add, I don't know who asked the question. I also wanted to add that we're quite aware that the lower or the more granular we're going, and the more the basis risk is felt, right? If you're looking at the space of a government or a full territory, a small difference in the output of the model is not necessarily as significant as if you are looking at a field or if you are looking at one fisherman and talking about one boat or one field producing yes yield. So it's really important for us to be reviewing the work that we have done. In fact, as Liz mentioned, we are undergoing a full review process of the model that we have. And we want to make sure that whatever we are proposing for the microinsurance product is going at a minimum to the same level of rigorousness and modeling as we offer for the government. That's number one. Number two, we also have to be very much mindful of that impact of basis risk at the micro level. And we have to really find the balance between what is it that we can do for one person and let me rather say, at what point in time must we start aggregating, right? We can't maybe help one fisherman, we can't maybe help a village or anything. We have to look at what is the minimum size of unit that we can confidently insure, and we have to rely on associations and on groups to be able to distribute, because it's otherwise very, very difficult, if not impossible, and dangerous for an insurer to try to sell it to a unit or to an individual farmer or fisherman.
So there were two comments from the panel. I had a comment and Damien has a comment as well. I understand the concern that the person that had the question has, and that is one of the reasons why it was proposed that when you look at insurance, even though we are talking about parametric insurance for the past 2 days, you also consider not just the probability of risk, but also the specific crop that is being insured. Because in a situation like not just coconuts, any other tree crop, you make the tree might fall down, not because of a category 5. I saw the presentation from GK, there are different trigger points and the 10%, 25% payouts. You may not get anything, or if you get something, it's not enough. So that's really the comment that I had, that just not look at it at just a parametric level, but consider the kind of crop that you're trying to insure to determine what model would work best.
Thank you. So just to answer the question from the colleague from our perspective, one of the big things for us at GK is to listen to our farmers, our clients, right? Our clients are who build us, who make us as a company. And so that is very important for us, which is one of the reasons why I would have even touched on the ESG slide, right? Now, coming from that freak storm that we had in November of 2023, we recognize, for instance, that even though we had a parametric product, that our triggers were too high, right? And so we went back to the drawing board to look at that, because we didn't want to have a product that our clients couldn't benefit from, that in the whole sense of how insurance operates would just not work. It means down the line that nobody is going to buy the product, right? And so we have gone back to the drawing board several times, and those rates that you're seeing in our presentation would have been revised. And even going forward, looking at the type of events and how frequently they're happening now, given the issues that we're having with climate change and global warming, it is something that we're continuing to look at. How is it that we improve the product to ensure that our farmers can benefit from it? One of the big things that we have recognized as well is that a lot of farmers are not taking that time out to educate themselves on what our offerings are, right? And so we go to these presentations and we'll share the information, but a farmer may leave just to say, all right, cool, I just want basic insurance coverage, right? And so we have taken the time out as a company to stop our farmers in their tracks to say, hey, we want to share with you a lot more. We want you to tell us and share with us what is the value of the farm. What is it that you're farming? And ensuring that the coverage that you're looking to purchase, should something occur and that trigger is met, that it makes sense, that you can buy back seeds. So our product is to look at the recovery or the faster recovery of our farmers, because if you were to look back in history, you'd recognize that when these events pass, sometimes the farmers will take 2-3 years to recover. Yet alone, in some instances, they never recover. And so it's important for us that our farmers are well educated and understand how it works. And that's a sad situation that would have occurred, that the trigger mark was missed by 1%. But we are a company that cares, and definitely we would have looked at certain things a little different coming out of those circumstances to ensure that our farmers can benefit.
All right, thank you. You have a follow-on comment, a quick follow-on comment? Oh, no, that's somebody else, sorry. Oh, yes, okay, there's a question at the back.
Hi, good afternoon again. A question for probably Nashel, the colleague from Grace Kennedy, and maybe Damien. Can you tell me, given that most of these products we're hearing come from Jamaica, do you want to see similarities between the farming sector or the producers in Jamaica and the Eastern Caribbean? I'm just thinking smaller size, different scale, and it may affect the interest in getting insurance, what you all offer. And what are the critical success factors, or what makes it work in your country that we could probably use here? And I'm asking these questions because we're trying to find solutions to move forward. Not just to hear what you all are saying, but how can we get products that are affordable and viable for the Eastern Caribbean? We've heard about CCRIF. It works with CCRIF, but what can we get and how can it be applicable for us here in the Eastern Caribbean? Thank you.
Thanks, Alistair. Can you repeat the first part of your question?
If they can see similarities in terms of the nature of production in between Jamaica and the Eastern Caribbean, Barbados, etc., size of operations, type of commodities produced, etc.
So I won't be taking it from the actuarial, very deep insurance part of it. What I do think, though, is necessary. So Jamaica is the 3rd largest island in the Commonwealth Caribbean. As I said, 325,000 hectares of our land is in agriculture. I think that's one of the reasons why the coconut sector can withstand so many things is because we have an agricultural board in place. I think that one of the things that these other territories can do, especially because they are small. I was speaking to someone from St. Kitts who was telling me that his population is about 40,000, and with Nevis it's about 50,000, and they farm everything, the gentleman there, they farm everything. So if you were to implement agricultural boards, like put legislative measures in place, get agricultural boards together to look into the research and development aspect of it, to partner with the insurance companies to provide the data that they need. I think that's something that should come from this meeting, having those boards in place.
For us, could you tell me your name again, sir? That's Mr. Clean, right? Yes. Yes. All right. So for us, there is not much issues, I must say. The real issue is resource just getting. I mean, our product is one that is sold directly to the clients, to the farmer. And so for us, it would be more so the resources in terms of just trying to ensure that we can get the masses to come on board where it is concerned. We would still have to do some amount of research as it relates to the data of the different weather conditions affecting or impacting your area, given that our product is more in tune to the perils. But that's something that we work with a partner that is able to provide that data easily for us. So it shouldn't be an issue. All we would need to do is to just look at having those conversations and seeing how best it is that it could be rolled out.
Okay, thank you. Lench, and then we have a question at the back. Lench, do you still have your question? No, you good? Okay, so we have a question at the back. So that's the final question.
Yes, good afternoon, ladies and gentlemen. My name is William Dick, and I've been working as a consultant for the insurance and reinsurance industry based out of London, much of which is to do with design of programs, including wind crop, and a lot of work in Jamaica with the banana industry. I just wanted to reiterate fully agree with the comment made by Nashelle Blackwood about being specific to particular sectors and crop types in talking about the type of coverage that's feasible. For example, wind crops losses over the long term were 50% in terms of hurricane and tropical storm and 50% from localized windstorms. So the threshold for which damage occurs in banana plantations is actually they're extremely vulnerable to winds. I mean, it is one of the most vulnerable crops. So it's actually very, very tricky to try and have a parametric type of product for the banana sector, for example. I think there's a lot of it's necessary to really get into the detail of product design in relation to sectors. There are lots of other things we could talk about to do with distribution and boards and farmer groupings for different subsectors, but this is not the time to do that. Thank you.
Okay, great. Thank you. So with that comment, I will draw our panel to a close. So round of applause for our panelists. Thank you. Okay, so we're almost there. I promise you, we're almost there. 1 second, Anish. I just want to remind you of our cards. So with the end of this panel, you now have the Caribbean perspective in terms of models, etc. So I would like you now to complete the back of your cards while we set up the penultimate presentation, I promise you. Okay, I'll give you 2 more minutes and then we'll bring on our final speaker. Sorry, penultimate, not final. Sorry, wishful thinking, right? So our final speaker is from St. Vincent, sorry, penultimate. Oh, gosh, stop it, Alice. She's actually from St. Vincent and the Grenadines, the National Insurance Corporation. What we wanted to do with this presentation is to give you a bit of a broader perspective on social protection as it relates to the agriculture sector. So she will speak about National Insurance Corporation, especially the take-up of farmers of pensions, I believe. So it should be an interesting presentation, just to build on this idea that we cannot think of resilience simply as coming from insurance, but there are some broader areas we need to look at as well, especially the broader social protection landscape. Okay, so I will stop sharing my screen. I hope you finished your cards, but you can carry on writing. And I will invite Mrs. Henry. to come on and share her screen.
Good afternoon. Can you see my screen?
Yes, we can, and we can hear you.
Great. Just 1 second, please. All right. Good afternoon again, everyone. I'm Valina Henry.
I think you have it in the wrong setting.
Okay. Are you seeing?
Yes, we are. Okay, you can carry on.
Okay, great. I'm Valina Henry, Chief Risk Officer at the National Insurance Services of St. Vincent and the Grenadines. I heard a bit about the take-up rate about farmers and so in terms of NS, but given the last-minute nature that I was given to prepare, I wasn't able to get those statistics, but I could speak a bit broadly. So essentially, the agenda is to speak about NS and the benefits available and some of the challenges faced by the NS and some things that we're looking to in terms of extending coverage, especially for those farmers and fisher folk that this seminar is based on. So National Insurance Services, we're social insurance, not parametric as was much of the discussion. So we provide financial protection against the loss of income in the event of lifestyle contingencies such as sickness, maternity, invalidity, work injury, retirement, and death. So we are legislated to provide social protection to citizens, well, in this case, St. Vincent and the Grenadines, but all national insurance services have the same mandate. We are governed by a tripartite board, and the board is duty-bound to ensure that the system is sustainable. NAS is important because we are a social safety net for retirement. We're set up primarily for retirement and other contingencies that I spoke about earlier. And we also have a socioeconomic mandate, and we contribute to certain sectors within the national arena. But also access to this fund, the social insurance fund, it is a fundamental human right as declared by the United Nations. So we essentially protect different types of workers. We have employees, regular employees. We also have the self-employed persons, where I believe most of the fisher folk and farmers would fall under. I mean, there would be some covered as employees working in the agricultural sector and so, and we have the voluntary contributors. For the employees, it is mandated that they be protected. The employees must make contributions on their behalf. But with self-employed persons, it's not mandated. And we'll see later on that is a bit of a challenge, especially within that's the sector that this seminar is about. To become insured, you must register with us, the NIS, and also make contributions to the NIS, and the contributions is a percentage of your earnings. And the reasons for making these contributions is so that you can become eligible to all the benefits that we offer. Right? Just by way of information, the employee total contribution rate for the employee is 12%. The employer would extract 5.5% from the employee's salary, and 6.5%, the employer would contribute 6.5%. The self-employed person would contribute 11.5%. They don't have an employer, so to speak, to buffer them, so that's why they technically have to pay the full contributions. The reason for the difference between the employer and employee and self-employed contributions, as you will see later, they're not covered for one particular benefit branch, which we'll speak about a bit later. And we do not take out contributions for anything over and above $1,200 weekly or $5,200 monthly. These rates and ceilings vary from country to country in the Caribbean. So this just specifically for self-employed persons, which most farmers and fisher folk would fall under. We do recognize that their livelihood is somewhat volatile in nature and it's seasonal. So we do give them the ability to choose the level at which they want to contribute. So there are specific income categories that they may feel comfortable with in terms of paying. And because we know it's so seasonal and volatile in nature, we also don't apply fines if they pay late and so forth. So we do have that flexibility in terms of allowing them to pick their income category. The benefits, we have the 3 benefit branches: short-term, employment injury, and long-term benefits. Just to give an idea of the benefits available, short-term in terms of sickness and maternity, and also have the funeral grant. We have the long-term benefits, mainly consist of pensions, survivors' pensions, and so forth. And those highlighted in red, employment injury. The self-employed persons are not eligible for these types of these benefits, mainly because right now the employer would have to verify that an injury would have occurred on the job, and a self-employed person, there will be a conflict of interest there. However, in the future, we are thinking to extend that coverage to self-employed persons, naturally at a higher contribution rate. The main reason we set up, as we said, was about pensions, and just to give an idea, it ranges between 30% of your 30 to 60% of the insured's average weekly, monthly, yearly wages, and right, that's the main. So it's just to give an idea as to what your pension could like, and it depends on how long the person would have contributed to the NAS and the level of wages. How we would have touched the lives specific to NIS St. Vincent. They have access to healthcare services, which we would have made contributions to. We would have donated a CT scan to the hospital. We would have even helped to construct an isolation facility during COVID-19. We also provide a monetary assistance, where we would have given $6 million to the Bank of St. Vincent and the Grenadines, our local bank, to lend to fisher folk to purchase fishing trawlers and so forth. And one of the benefits during COVID-19, we would have issued a temporary unemployment benefit, and some fisher folk and farmers who would have made contributions to the NS, they would have benefited from this program. We also have annual Fisherman's Day, where we would have made contributions to. Some challenges faced by the NS, I'll really just speak to the ones specific to in this forum. In terms of labor market, there's a high level of informality, especially given the fisher folk and farmers. And I heard it mentioned earlier in terms of these persons not seeing the benefit of contributing to the NAS. They think generally more short term in terms of what is in it for me, and they're not necessarily thinking down the road in retirement and so forth. So we do see that there is a low take up in not just the fisher folk and the farmers, but even generally speaking, self-employed persons. So what we are trying to do to extend coverage is to improve the convenience, confidence, communication, cooperation, and commitment. So one of the things we're trying to do is to have strategic partnerships with Farmers Association, Ministry of Agriculture, and the Fishermen Corporation. And it's to essentially get buy-in to let them understand the benefits that are available to them by contributing. And also we recognize that the way of doing business may not be the most efficient. So we're trying to meet them in the middle and even probably see what their needs are so that we could better accommodate them. I think that is pretty much the end of my presentation. I don't know if you have any questions, comments, or
Yes. Thank you, Mrs. Henry. Any questions for Mrs. Henry? Okay, we have one at the back.
Sorry, I didn't put on my video.
Or maybe you can stop sharing screen.
Okay.
Maybe.
Yes.
Yep.
Mrs. Henry, you mentioned that in instances where payments are outstanding, that there are no penalties applied. In the instance of a payout being triggered, is there a policy with respect to outstanding contributions?
Well, there are certain eligibility conditions depending on the benefits that they're applying for, right? So, for example, if it's a short-term benefit, let's say a sickness benefit, they need to make at least 26 weekly contributions, right? So they must have that number of contributions, but at least 8 of those contributions must be within the last 13 weeks. So if they do not meet the eligibility criteria, then, you know, they will not be eligible for the short-term benefits. However, for the long-term, like the pensions, right now, the number of weeks of contributions is 650 weeks, which is about 13 years. So once you have contributed at least 13 years, it doesn't matter if you didn't make a payment in the last 5 years, you would have met the eligibility conditions, so you would get a benefit. You should get your benefit. So it depends on the eligibility conditions.
Okay, great. Thank you. Any more questions? Yes, Lench?
Yes. With regards to covering farmers, if there's a farmer or a fisher who has the impact of Hurricane Beryl, and they out of production or unable to make contributions, say for 6 months, what would be the impact on the potential benefits moving forward? Would they have to start all over again?
No, they will not have to start all over again. Again, it really depends on the eligibility. If their main contribution is for retirement, it does, once you meet the minimum number of weeks or years of contributions, it doesn't matter if, so right now, if a farmer would have contributed, not necessarily consistent, would have made contributions for at least 13 years into NS, they are eligible. It doesn't matter if there were periods where they did not contribute. It doesn't matter if immediately before they become pensionable, they did not contribute. Once you have the total number of weeks required for the pensions, more in particular for the pensions, then you are eligible. And again, it doesn't matter in terms of if it's sporadic payments, if periods are missed, but when we totalize all the contributions in the system, once you meet that, that's for pensions. But these short-term benefits are a little bit more tricky you have to have contributed at least pretty recently to be eligible for the sickness and the maternity benefits. But for the pensions, it really doesn't matter. The main thing is that you meet the minimum number of weeks of contributions.
Any more questions? Yes, one at the back. Alistair?
Thanks, Alice. A quick question. I have been saying that, in my view, I should say, there's need for increased sensitization of the benefits of insurance, etc., if we are to get more uptake. So I want to ask the colleague from St. Vincent, since you all have been working with farmer groups, etc., to promote the benefits of national insurance, can you identify any success stories or you have seen improvements or increases in the uptake of the insurance? Can you tell me if you all have done any of that kind of research?
Well, I can't say specifically to farmers and fisher folk, but truth be told, in St. Vincent, we are in a sticky situation where we just implemented some reform measures where we would have increased the contribution rates and so forth. And persons, especially persons who are, it's not mandated, not mandatory, self-employed persons, they might wonder, okay, I have to pay more and I'm getting less. So more and more, I think they're weighing the pros and cons of really, is it really worth it? So there's that challenge, right? But nevertheless, we do see, I think once persons generally understand why we had to make these changes, even though they don't like the changes, they still seem like, okay, the benefits offered are, good benefits, and it's something they should think about. But we haven't done any research to see if there's particular uptick. But there's something that we always want to do. But having gone out, because I speak to a lot of different groups, I personally haven't spoken to fisher folk or farmers, but I would have spoken to, say, taxi drivers, where I know there was one success story for sure after COVID-19 when we issued the temporary unemployment benefit, where, he was essentially an advocate because his colleagues were really not for it. They figured they could do their own investments and so forth. But this guy really spoke about, he wouldn't have thought that NAS was that important, but during COVID, when his business was affected and we issued the temporary unemployment benefit, he was a beneficiary and he was grateful for it. So I think what we need to do is to probably get more of those stories, and probably in our advocacy and our education sessions, probably bring out some of those stories to hopefully get persons more on board.
Okay, we have another question.
Okay, my name is Lorenzo George, Fisheries Officer, St. Vincent and the Grenadines. So I just want to add to the discussion and to support the point that was just made. What we would have done in the past is in an advocacy role through the contribution that the NIS would have made over the years at our fishermen's function. We would have encouraged and have an officer at every year leading up to the celebration that to come and we educate our fishers about the importance of the self-employment aspect of the program. Because we would have seen fishermen all the years they ploy their trade, and then at the ending of their livelihood where they cannot no longer fish, there is minimal support that they have, and sometimes, difficulty in terms of having that livelihood support going forward. So we are working with the IS, we continue to work with the INS, and it is something that I think that we would have done some work, and I think more needs to be done. And I think through the National Fisher Folk Organization, I think there was some discussion held recently at, I think, the recent meetings that we would have invited the NS to come on board, and from that level, you know, we can work together to go out and sensitize more of the fishermen and fisher folks to just be part of the national insurance program. So it's a very, very good point and something that we are committed to, and we will continue to work to increase the numbers. And yes, if you were to ask me over the years, there is an uptake, small, but more needs to be done.
Okay, great. So I have a question, just a short one, and you can answer briefly. I just wanted to find out more about the funding that you provide for loans. Can you say a little bit more about that?
What I believe we do, we would provide, we're not experts in managing loans, so we provide the funds, Bank of St. Vincent or National Bank and the Grenadines, to be able to manage that aspect of it. So all what we do really is provide the funds and let the bank manage that part of it. So we don't deal with the eligibility conditions and so forth, but we, you know, lend that support in terms of the funding aspect of it. But not
Okay, great. And that's something you do on a regular basis, or?
We do it as the need arises, maybe if there's a request or so forth.
Okay, all right, great. Thank you. Thank you, Mrs. Henry. Any more questions in the room? No, I think that's also. Thank you very much for staying online and waiting for us. That was an interesting presentation. So I will invite, we'll have our final presentation from Grenada. So we'll just hear briefly about the Grenadian experience. We've had mention of Grenada yesterday, today, in terms of their approach and the payout from on the back of Hurricane Beryl. So I'll invite Ms. Kamika Hopkin, and I think we have someone online to give us our final presentation. Thank you.
All right, good afternoon. As stated, my name is Kamika Hopkin, and I'm a policy analyst within the Ministry of Finance, Grenada, the Macroeconomic Policy Unit. I should also be joined online by my colleague, Mr. Michael Church, Planning Officer in the Ministry of Agriculture. Right, so while I'm coming up, several persons asked me to be very brief. Unfortunately, a lot of the examples earlier today and yesterday did make reference to Grenada, so I'll try not to repeat anything that has been said already. So jumping straight into it, I thought it would be prudent just to sort of introduce what I would have defined Grenada's disaster risk financing strategy as. And I considered it to be a multi-tiered risk layering approach because it leverages so many different instruments that provides us with varying levels of coverage. At the top, we have the Caribbean Catastrophic Risk Insurance Facility, which we've been hearing a lot about. We also have a contingency fund at the Eastern Caribbean Central Bank, contingency lines of credit from various of our funding partners, such as the World Bank. We have the catastrophic deferred drawdown option. We also make budgetary allocations every fiscal year towards disaster financing, which averages about 2 to 3% of GDP each year. We also this year had a local disaster relief fund, which was dubbed the Hurricane Beryl Relief Fund, because we had such an outpouring of support from Grenadans locally and the diaspora, tourists, non-profit organizations who wanted to contribute to the rebuilding effort. So we thought it prudent to have this designated account that they can donate funds towards. We also have our development partners, and we receive grants from organizations, international organizations, and friendly governments that assist us when disasters strike. So as you see, insurance is not our only option when it comes to disaster financing. So narrowing in on CRIF specifically, Grenada would have joined CRIF since 2007 from the inception, following the devastation that we experienced during Hurricane Ivan. And as you heard, we did receive our first payout this year of $55.6 million US, and that includes the payment directly to the government of Grenada and to two of our public utility entities, NAWASA, which deals with water, and Grenlec, which is the electricity company. And the funds that we received from CRIF, as well as from the different grants and donations, will be utilized for immediate recovery efforts, such as the clearing of debris that was very, very important at the onset of the disaster so that we can access vulnerable individuals who are either trapped in houses or to ensure that there was not severe loss of lives. I think we only had 2 deaths related to Hurricane Beryl, if I stand corrected. Also for repairing public infrastructure and supporting communities affected, whether it is the agriculture and fisheries sector, resumption of businesses in different sectors of the economy. So why did Grenada decide to become a CRIF member country? From a financial perspective, the value of CRIF the value of being a CRIF member country can be best explained within the context of these features that are highlighted here. So in terms of a more proactive approach to disaster risk financing, the stories coming out of Hurricane Ivan when it struck in 2004, the severity of the destruction and the length of time that it took to receive financing from friendly partners, these underscore the importance of having some sort of protective measure in place long before a disaster strikes. We also heard a lot about the parametric model that is used for CRIF, which entails the predefined triggers. And the CRIF team presented yesterday on the ability for payouts to be made without having to conduct an extensive loss assessment on the ground. And for the member country, this also helps us with ensuring that human resources are directed towards emergency response rather than trying to quantify losses in time to submit a claim. Also, the quick disbursement component, 14 days based on indices. We were able to put that to the test this year, in fact, because I can confirm that it was July 13th when Mr. Anthony, the CEO of CRIF, was actually in Grenada to hand over the check to the Ministry of Finance, NAWASA, and Grenlec. The rapid relief and tied to that reduced fiscal burden. As soon as CRIF was able to confirm that Grenada would receive a payout, and I think that was just, the first day after the disaster strike, Ministry of Finance and the Office of the Prime Minister were in conversations with Mr. Anthony, who actually reached out to us first. And the government of Grenada was able to make a quick decision to reallocate capital expenditure towards relief efforts, like clearing roads, relocating some of the vulnerable elderly that were left homeless in Karakou, and providing additional food and shelter to persons who were left homeless otherwise, and so forth, because we were guaranteed that within the next 14 days, some of these budgetary allocations that had to be shifted around would be replenished. Being a CRIF member country also helps us with promoting resilient building, because the additional resources that we receive can help families and communities to rebuild more disaster resilient infrastructure that could withstand another event. And of course, my favorite features are the supplemental policies that are the add-ons to the CRIF premiums, which are the reinstatement of the sum insured cover and the aggregate deductible cover that member countries are able to add on to their premium to be insured for a second disaster or to receive some degree of aid if a disaster occurs that doesn't fully trigger their policy. So moving along quickly, as stated, Grenada is covered for all 6 of these policies: earthquake, tropical cyclone, excess rainfall, coast for the fisheries sector, electric utilities and water utilities, and the earthquake policy was the only one that was not triggered with burial. In terms of our payout, we received $44.0 million to the government of Grenada, which includes $0.5 million for the excess rainfall policy, $1.07 million for coast, and $42.4 million for tropical cyclone. Grenada Electricity Services, that's GRENLECT, would have received $9.3 million for damages to electric utilities, transmission and distribution facilities. And NAWASA, National Water and Sewage Authority, received $2.2 million. And an interesting story is that merely days before Hurricane Beryl struck, NAWASA had actually signed on to this policy year. So they were able to receive a payout instantly after only being signed on a couple days prior to Beryl striking. So the total payouts to all entities covered by CRIF in Grenada is $55.6 million. Questions were asked yesterday regarding the coverage. So this is how Grenada goes about selecting our annual coverage. So annually, CRIF would submit the policy options to the Ministry of Finance prior to the commencement of the policy year. And these options would include varying attachment and exhaustion points, as well as the ceding percentage and the corresponding coverage committed at each level of premium. So the country does get a say in terms of how much coverage they are going to have each year. And of course, as a country, you get to determine whether you want coverage as low as a return year, a trigger return year of maybe 200, or as high as a 9 years, which is a more frequent occurrence. So for the special offers, as mentioned before, we have the aggregate deductible cover, which is activated when model losses are insufficient to trigger a country's policy, and the reinstatement of sum cover, which provides access to protection even after the policy coverage limit is reached. So that's up to 100%. So God forbid another disaster strikes, Grenada is still covered for 2024. And so Grenada aims to secure the highest possible insurance coverage available for each product offered by CRIF, because we recognize the importance of CRIF's insurance products in mitigating the financial impact and devastation caused by natural disasters. And by maximizing coverage, Grenada, we intend to strengthen our resilience against natural disasters, economic shocks, and the economic shocks that typically follow such events, and ensure a more rapid recovery and reducing the burden on our citizens and on our national budget. Right, so the value proposition. Yesterday, one of the participants asked me if Grenada could speak to their Ministry of Finance counterpart to debunk the misconception that CRIF was too expensive and so forth. So I think this diagram, very simple diagram, might help deliver that message. So if you look at the column to the far right, This is the potential cost of recovering from a natural disaster in any given year. And depending on the type, size, or frequency of the impact, this value can be as high or as low as possible, but ideally we all want it to be zero. The column to the far left represents Grenada's payments to CRIF from 2007 to 2024. And for our tropical cyclone, excess rainfall, earthquake, and coast policies as they came on stream over those years. And that's a total of $24,216,677. So that's just $24 million in 18 years, which averages out to about 1.3 million annually. But of course, some of the policies did come on later on. And at the center, we have our very first payout and CRIF's largest payout to date of $44.0 million, which is specifically to the government of Grenada. And this payout represents almost double the investment that we have made to ensure that our people and their livelihoods have some degree of protection annually. So mere days before Beryl struck, as I mentioned, NAWASA was able to sign on to the quick segment, and that also afforded another layer of financial protection that they did not actually budget for this year. And also I wanted to highlight the capacity building value that CRIF provides, in that they also have the internship, the technical training programs, the grants, the scholarships through UE that member countries can benefit from. So for countries that have not signed on to CRIF or any other insurance facility and are still doubtful of the value of such a protection, or perhaps considers it unaffordable, this is the value proposition learning from Grenada at the macro level. So insurance is not expensive, providing citizens with ease of mind during a disaster because their government has taken proactive measures to safeguard against their livelihoods is not expensive. What is expensive is having to respond to a natural disaster that has caused devastation, costing about 200% of your GDP in the case of Ivan in 2004. What is expensive is having to rebuild 95% of the housing stock in Karakou, which was destroyed with Beryl this year. And what is expensive is having to revitalize the breadbasket of our economy, with 85% of the agricultural lands destroyed between Karakou and St. Patrick's in the northern part of Grenada. And some of these trees take 25 years to reach maturity. So that's a lot of loss when you project the value that they would have provided over that time, and the time is going to take for them to reach that peak again. And so that is why today Grenadians are very grateful that our policymakers did have that foresight to sign up for CRIF back in 2007, and that we continue to make premium payments annually so that we can immediately restart the rebuilding process and build back stronger and ensure that we're more resilient when another disaster strikes. Because, I mean, today we are discussing parametric insurance for the agriculture and fisheries sector. And then the other sectors are going to ask, what about tourism? Well, what about the creative economy? So what I'm gathering from this entire session over the last 2 days is the importance to actually have the players in those sectors actually be willing to contribute towards a premium payment, because they're going to come asking, you insured agriculture, you insured fisheries, what about us? We contribute just the same, right? So that is the end of my presentation. If my colleague Michael isn't online, I'm okay with running through his. No, I'm finished. Yeah, but Michael is supposed, I think it should be like 4 or 5 slides. So I can go through. Okay, you found it? I can actually go through his presentation. It would have just given sort of an insight into how the payments would be utilized for agriculture and fisheries. I also have Ms. St. Louis from the Ministry of Agriculture that could sort of make any correction or add anything that I miss out. So quickly, Are you finding it? It's just parametric insurance. Yeah, but I can read from here. So based on the Ministry of Agriculture's perspective, Grenada currently maintains 2 parametric insurance policies designed to provide coverage for cocoa and nutmeg producers and fisher folk. The government, in partnership with the Grenada Cooperative Nutmeg Association and the Grenada Cocoa Association, has procured insurance coverage for the members of these organizations through COP-F. I'm not sure what that acronym stands for. Okay, through CORP-F. The fishers, of course, have the coast policy, which offers parametric insurance coverage for fishing vessels, fishing equipment, fishing infrastructure, and providing essential protection for farmers' assets and operations. From the receipt that we got from these insurance payouts, owners of 0 to 5 acres of land will receive a one-time payout of EC $4,500. Owners of 5 acres and more will receive EC $9,000. And fishermen will be receiving materials to repair their vessels and to replace their boat engines through the coast payments. That's it. So I'm okay with taking any questions. I'm very new to this area, so please go lightly with me.
Only 2 questions, and then let's summarize quickly. So 1 question here in the front. Any more?
Thank you. I'll be extremely brief. First of all, I'd like to thank you for the real compliments to Cliff.
Yes.
Thank you. You've been a great spokesperson, and we'll keep that in mind. I also wanted to compliment, not ask a question, I won't put you on the spot, but really compliment the question of value proposition of the product. We spoke over the last couple of days of pricing and of pricing of the insurance. We talked about some rate on lines, right? Premium rates that are in the margin of 5, 10, 15, sometimes 20%. We saw some figures of 60% or more, right? To give you an idea, and this is obviously country specific and everything, but our policies for tropical cyclone are usually below 5%. In the case of Grenada, it's below 3%. Right? But not only it's 3%, but we also have the reinstatement cover, right? Which means that not only you received already over almost 55 million, but on top of that, it's fully reinstated, right? So it is 3% essentially for double the coverage, right? Which could be extended to almost less than 2% or 1.5 or so. So it is really extremely affordable compared to the market prices, and I just wanted to emphasize this. Thank you again.
Thank you. Oh, we have one at the back. Yeah, go ahead. Go ahead, Dave. At the back, yeah.
Yes, I just wanted to ask about, I noticed in the perils that you are covered for under the CRIF, you don't have wind, right? Tropical
So wind is the peril covered under the tropical cyclone policy, and also under the coast and the electric and the public utilities policies.
Oh, okay. All right. Thank you.
Thank you.
Okay, thank you very much, and thank you for your patience. Now we have Lynch. He's going to summarize today.
Thank you. I will be brief. The morning began by looking at there were presenters from Europe, mostly specifically Spain, Cyprus, and Italy. And I'm going to concentrate on the similarities or the general trends of the presentations from the presenters. First of all, we note that the insurance system in Europe is generally a private-public partnership, and it is also highly more regulated when you compare it to the Caribbean realities. We also note that the system have been in place in some instances for years, and they actually have built in a lot of knowledge and experience with the system. It also indicated that the system is always reiterative, always adjusting, always adapting, and in many instances there is support from the state, either the EU or the state itself. We note that the role of in terms of the public-private partnership, we note the role of the public sector in terms of regulating and overseeing the system. One thing that I did note in particular was the fact that they indicated that the adjusting systems being accurate was actually very important, so that the farmers' trust could be built and to be maintained. But I also noted that the payouts have been increasing generally from 2000 upwards in most of the instances, and in general instances, the payouts have actually been more than the premium. So it indicates the level of risk have been increasing, and I noticed that a lot of the speakers indicated that. One of the other presentations was done by by Copernicus, the monitoring the satellite systems, and the presenter indicated spoke to the use of the satellite system to analyze various components, be it water, be it coverage, being able to assess post a flood and also fire. So he indicated the ability of using that system to help support decision making, and also to provide advance warning or advice to farmers. The following presentation was done by Mr. William Castro, Alliance for Partnership, and he spoke to de-risking the whole of the value chain, and he discussed the alliance system and how they look at the value chain to help de-risk the value chain. And he mentioned intercropping as a strategy for de-risking, and I found that what was a bit innovative. So it basically spoke to managing risk by the behavior of the farmers in terms of, or the agro-entrepreneur or the entrepreneur, in terms of being able to use the actions to manage the risk. Now, in the afternoon presentations, there was a presentation from Mr. Hines, who basically gave a synopsis over the years of the Caribbean experience. He began with wind crop, and he went through the respective insurance systems, insurance products that are available in the space. And he really describes, compared them and spoke to a description of them. And in concluding, he noted the emergence of the regional insurance programs in the space, and that it was important that most of these programs are focusing on climate risk and not necessarily other issues such as predatory larceny and pests and diseases. And also he noted there is a low appetite for uptake of insurance by farmers, and he also, like the European experience, noted the increasing losses in the space. I know. I won't be long. There were also presentations from Jamaica, and that was a really interesting presentation based from the coconut industry board of Jamaica. But what I noticed from the industry board, it appears that that system is, although it is quasi-state, but it appears to be running on its own, and therefore that is not getting too much support from the state. So therefore that puts pressure on the system, and you indicated that there are problems in terms of the uptake of the farmers, since there were large spaces, time between the events, and therefore farmers were not were moving away from wanting to pay or contribute to the system. So that was interesting. You did note that a few recommendations that moving forward, that including developing more, looking at your regulation that have been there for such a long time, developing more, I would say, products that are more in keeping with the times, and probably communicating to the farmers and the stakeholders as to the need and use of the product. Okay. The next presentation was by the gentleman from ILO, and he spoke about protecting livelihoods, and he indicated that there was a need to focus on capacity building, was improving the demand side of agriculture, and indicated that insurance should serve to protect livelihoods. He also noted that insurance can also be used to boost productivity, and livelihoods and protections are also been linked to the SDGs, in particular SDG 13. The other presentation was done by Elizabeth Emmanuel from Coast, and from CRIF, and she spoke in particular about the respective system, and she did mention in particular that CRIF had two products, the Coast and CRAIC project, and a broad overview of the Coast provided acts like microinsurance, livelihoods, etc. And noted that microinsurance is important and can be used as a mechanism for vulnerable groups to access insurance and recoup losses following natural disasters. She spoke of a new product that's been launched by CRIF, the Climate Risk Insurance, which is a microinsurance livelihood protection policy. And work has started with Griff Kennedy and other organizations. Now, the other presentation was entitled "Resilience to Climate Change," and it was done by the gentleman from Grace Kennedy, who spoke about the products that the Grace Kennedy has respect to this area. And the indicated product is divided into 3 seasons, and it's called GK Weather Protection, and is also parametric in nature, and also addresses excess rainfall, drought, and hurricane winds. But one thing I did notice was that the drought component was only calculated at the end of the drought season, which was interesting to me. Of note, the next presentation was from NIC SVG, and Ms. Henry discussed the benefits of the scheme. We would note that with specific questions were asked with regards to the contribution of farmers or sporadic contribution of individuals, whether or not that would impact their benefits. Indicated that in terms of retirement, no, that would not. But in terms of the other benefits, it would be dependent on their contribution before the peril. She did speak about the challenges, including low uptake, and then the main function of the NIC system would be pension focus. With regards to the Grenada experience, Grenada, coming off the recent impact of Hurricane Beryl, and with a total payout of over 55 million US dollars, and she indicated the advantages of this of the payout, such as receiving the payment in 14 days, the use of the emergency funds to replace rapid drawdowns on the central coffers, which would mean that the government of Grenada would have to spend. She did compare did a cost benefit analysis of indicated that she spent Grenada spent over $24 million over 18 years, and an average of 1.4 million annually compared to receipts of 44 million. But I would also like to indicate that based on Grenada's the Grenada's report, there's a total loss of both direct and indirect of almost $500 million. And I think if you consider this total benefit versus the cost of 24 million, I think it is actually quite beneficial. And she indicated, and Grenada is a very good case for the payment of parametric insurance in this space for protection. Thank you very much.
Thank you, Lench. Wow, that was very comprehensive. Okay, thank you, everybody. We've come to the end of day 2. Please leave your cards on your tables. We will collect them. The cards with the EU lessons on the front and Caribbean lessons on the back. So we will be collecting them. Tomorrow we start at 8:30 with registration in the Secretariat room, and then the sessions will start here at 9 o'clock as usual. Tomorrow we have group work, so we will be putting you into groups, so it should be more interactive. But thank you very much for your participation today, and see you tomorrow. Thanks.